All right, good evening. Thank y'all for coming to this specially called work session. The purpose of this particular work session is just to discuss our most recent audit. Board members, I passed out to y'all just kind of an outline of the process for tonight. And I've provided that to the auditors as well. So the first thing I would like to do is allow the auditors to come up to the microphone up there and just introduce themselves. And then after that, I'm going to let them go through and discuss kind of what the audit process is, what it involves for them, and then we will get into each of the individual findings. If y'all are ready.
It's good to go.
All right. Thank you. Appreciate y'all inviting us down here tonight to talk to you about the audit. Our interest in being here is the same as you all's, I think, and that's just getting the issues that have gone on the last couple of years corrected so that you can move forward and get rid of some of these issues and financial issues. Let me explain what our audit is and what it is not. We do a financial and compliance audit. We do compliance with state, local, and federal laws. We do financial on the financial statements, balance sheet, operation statements. What it is not is we don't talk about the effectiveness of the instructional program, the effectiveness of how you're carrying out educating the students. So we do not get into that at all. The most we will do with instructional supervisors will be their responsibility over the financial and the reports that they file with the State Department of Education. And I'm going to introduce my Middle Tennessee audit manager. I'm assistant director in Nashville. I'm over the 90 audits of the entire state. And Jeff Bailey is our audit manager for Middle Tennessee. He can explain a little bit more about the specifics of the audit. And then we've got our staff here that actually did the work. They're the ones that know the details and what went on. Jeff and I are a little higher level. We don't know a whole lot.
Hi, I'm Jeff Bailey, and like Brian said, I'm the Middle Tennessee Audit Manager. I cover my group, my Middle Tennessee group of auditors. We cover 21 counties in Middle Tennessee, excluding Davidson. There's 5 counties across the state that our office does not audit. Those are audited by CPA firms. And so in Middle Tennessee, Davidson is the county that we do not audit. Our audit process typically is twofold. We come in the springtime, we look at records, try to do any work that we can in preparation of year end, of the June 30 year end close. After June 30, our auditors come back and they take the closed accounting records and we finish up that financial and compliance audit. We have to have all of our 90 counties published by March 31st each year. So we will come back in the fall or maybe even after Christmas to finalize the second phase of our audit each year. We typically will have 2 or 3 auditors. We'll have an audit supervisor that will review their work, and then when the audit is finished, it gets turned in to me for my review, and then when I'm satisfied with it, I turn the audit over to Brian and in our Nashville office. I have worked in Middle Tennessee with the Comptroller's office now for approximately 27 years. So I I've been around this arena for a long time. Kent White, my audit supervisor, is going to discuss the findings with you, and he may have a question that he would like for me or Brian one to answer, but I'm going to call him up here now.
Hello, I'm Kent White, and as you said, I'm the field supervisor for your audit. I'm a CPA, and I've been doing this work for about 21 years now. I'm not sure how you want to go about discussing these. I think I'll maybe read the heading to the finding, and it'll be open for your discussion if you want to ask me questions as to what happened or, further explanation. The first finding was the office did not reconcile the general ledger payroll liability accounts with payroll reports and payments, and did not provide documentation supporting these account balances, which resulted in a qualified opinion. Your payroll liability accounts on both your general purpose school fund and your school federal projects fund, there are a number of accounts there for things like employees insurance. That's the main kind of account we're talking about here. They had some large balances on them that we were not able to identify. We were not able to get any documentation that would support those balances, and therefore we were not able to give you a clean opinion on your audit.
Yes, sir. All through our audit here, we've seen the word material or materially. Could you give us a definition of what that actually means?
Well, it's a calculation that we do based on total assets and total expenditures for the year. What it really boils down to is material is this number large enough quantitatively or qualitatively that it would change someone's opinion if they were reading the financials if it was wrong. So it's not a small error, it's a large one.
Okay. All right, thank you, sir.
Mr. Dudley?
So you said that you were finding large balances. These were sums that you felt like had not been paid to the appropriate insurance companies or
Well, these were some, sir, that I couldn't determine whether they were actual liabilities or just errors in the records.
Okay, thank you.
That was a finding from the previous year as well as this year?
No, ma'am, this finding was a current finding. Okay. Or actually, this was the first year that we were not able to get documentation and therefore had to adjust the opinion.
Okay.
Ms. Morency?
When you say current finding, is that like right now?
Current finding as of the time we did our audit, which was for the year that ended June 30th, 2017.
So this is 2016, 2017?
Yes, ma'am.
Okay.
Up through, I guess, the time that we finished our audit, these matters had not been corrected, and that would have been the last day of field work on the audit was February 14th of 2018.
Okay. Can I ask for an explanation from Karen, if you can help us out here? And has this been taken care of, or?
Going forward, it's been taken care of, but when this was made known to us in the time period when we were asked to respond, then that's when we identified what the liabilities were to the best of our ability. And we've set up a process going forward to not have this be a repeat finding.
Okay, but the balances that were there, what are we doing about those?
Well, it's basically entries. It was trying to identify what liabilities they were, and we were able to identify them as federal income tax, Social Security, and Medicare. So it's a matter of making the adjustments.
So those adjustments are being made, have been made, will be
We
made?
just, we just made them currently in this month, and so it's actually gonna, some of the adjustments that we're gonna have later in here are going to show up in our March financial statements, so you'll see the impact of making these adjustments.
Okay. So, but going forward, we're not going to have this problem or this finding?
Going forward, we've set up a process so that I will work with the accounting department to make sure that the, these accounts are reconciled and cleared out.
Okay, thank you.
Does this refer to the time when Social Security, when things were not paid? Is this what this one is about? When those things were not paid?
Yes, ma'am.
And that's a legal issue on our part, isn't it? I mean, that these things have to be paid, and we didn't pay them. Social Security, what else? What else was not paid?
Sorry. This is, it goes back to when we first came on. I'm with VACO. I'm Elaine Cook. I came on in January of 17. So as I came on, I was involved in doing other things, so I wasn't involved in all of this per se, but did have conversations and that sort of thing. When we started to look into these, we realized that there had been a lot of things not paid prior to our coming on.
Income tax.
Yes, ma'am.
Yeah.
Yes, ma'am. And so we've worked on those, and as far as getting the reconciliations, we now have a full-time staff person that that's part of his monthly duty, is to start reconciling those and being checked by our office.
How long did that go on until it was discovered by you all?
Well, I believe, I can't recall. I think it was spring of 2017,
So it went on all during,
the fall. Yes, ma'am.
okay.
And we didn't know what we walked into, and I don't think anyone understood the the magnitude of all of it. We certainly didn't until we started uncovering some of these.
Well, I would think we'd have to correct that, because that would be, put
Yes,
us in
ma'am.
legal jeopardy for sure.
Yes, ma'am.
Mr. White, now that we're talking about Social Security and things like that, I was looking through some of the other audits that the comptroller has done, and I noticed for one, it said that it was another county, but it said that IRS did not receive their payment, and it was a small amount, but that would be applicable in this case too. But this, if what Elaine and Ms. Gagliano are saying would be that we didn't pay Social Security taxes on some of our employees, could that have been a separate finding if you had known what this amount was?
Had we known that they were not paid on time and that generated penalties, it would have been a separate finding. However, we did not see that.
Okay. Is there, and I guess this is really a question for staff, but is there a reason why we never knew that there were IRS penalties that were being assessed and payments that were not being made?
I can't speak on that. We did not discover some of these things until the spring, and of course, we're working on additional things, trying to, get the payroll situations under control. We were able to work with the IRS to, how do you say it? To waive some of the penalties.
Some
once
of
we-
them or all?
I don't know if all of them. I'm pretty sure it was a good amount. I don't have the dollar amount sitting in front of me, but we were able to negotiate those things when we explained to them what had happened previously, and exactly what had happened with the walkout and bringing VACO in and all of those things. Does that make sense?
It does, but can you go into detail as far as this walkout? Because that's not what we...
Well, I'm talking about
Okay.
when...
Just the
Ms.
CFO?
Yeah, Ms., whatever her, I'm sorry, Ms. Burks, yeah. So when she walked out and things, I've been an accountant for over 30 years, and in my career, I've never experienced some of the things in the manner in which I've experienced them here. When you set up a new system, you run side by side, and they didn't do that. So,
Parallel,
no, ma'am. Skyward and
running
local
Skyward at the
government.
same time that you're running local government.
Some of these things could have been discovered at that time, realized that they weren't set up properly. So when those things happened, and then they decided, and I don't know who it was, to do a payroll out of the old system for teachers not to be set up in the old system at this point, you're going to have all of these and all of these issues. And this was a perfect storm, exactly, for all of these things to come about.
And I know you're here somewhat on behalf of VACO and because you've worked on this for a while, but at the same time, I know I asked Mr. Parliament that question about running it concurrently, essentially, and he said that that wasn't something that we would do. So
Wouldn't
I'm not
run
really,
what concurrently?
we would not run those concurrently.
I don't know what.
Yeah, I don't know if, maybe we're not talking about the same thing, but, because Eric wasn't here during the changeover.
Right,
Or
he
is it
said
you
that
were
it
just
wouldn't have
saying
been
in
done.
hindsight he
No, he
wouldn't have?
said he said in hindsight he wouldn't have done that either, so.
Okay, well, I can
I
tell
guess
you,
I'm getting one side from VACO, and then I heard something else from him, and so I'm not an expert in finance. I mean, I will just go ahead and say that right now. We've got a lot of people with a lot more letters after their names that represent different accounting tests that they've taken and whatnot. My one semester probably ain't gonna cut it for what we're trying to do here, so that's why I'm really trying to lean on them and lean on y'all for
Yeah.
some of these answers.
I would say without a doubt that any transfer to a new account that I've ever been, or a new software program that I've ever been involved in has been side by side. And that's the only way to check to make sure, especially if the one you're leaving is correct, then you want the new one to match that, and then you jump, you can even do it for 2 months in a row just to be sure.
Right.
So, yeah, it's definitely something that should have happened.
And Dr. Marzak, whenever you've changed over from a finance system, how would you have done it? I mean, you were here when that process occurred.
Yeah, so that was a conversation we had. That was something that Dr. Berkins raised up, and I looked at Dr. Berkins, I said, I'm comfortable with your recommendation, whichever way you want to go. And so that's the decision that was made moving forward.
Okay. Ms. Kinzer?
Just going back to the time period of which those things are not paid, which looks to me several months. What kind of, and we were not really informed of this ever, oh, by the way, we haven't paid Social Security, income tax, any of that. Retirement, insurance, all of that. We kind of heard it from the teachers directly, maybe, but I don't even think they were aware to the degree of which their income tax hadn't been. But what my question is, as a board member, what kind of liability were we open to, and why were we not informed about it at the minute we found out about it? Why weren't we made aware of that? If this board is responsible for the finances of the school system.
So going back to the end of the year summary that Mr. Parlin put out, basically when they found out, they automatically contacted the agencies and they started to make retribution. They started to make the payments and start to pay things. So one of the things that he was able to give you guys with the closing out document a couple months ago, I think maybe October, November, was since they did remit them and they did contact the IRS and the IRS did understand what was going on and what happened, those fees were waived, or actually the penalties were waived. So what Mr. Parliament did was he just got in and he fixed it. He started submitting the monies and started to bring all the accounts to healthy.
And I appreciate that.
Yeah.
That's not my question, though.
Okay.
I'm questioning what kind of liability we were in pursuant to all this when it went on for months and we weren't informed.
I would have to turn to Mr. Wolliver and ask him that question.
Increased interest and penalties on the unpaid amounts. I think that's the biggest liability the board has.
Ms. Bowers?
I'm curious as to, I'm really interested in what, we're thinking, oh, most of them are gone, or maybe all of them, or I think most of them. I don't want to know, vague numbers. I really want to know what penalties we paid, because what we're paying in penalties is money that's not going to kids. And Dr. Marzak just stopped when he said fees, and then he stopped and said penalties. So I assumed that penalties were waived, but that did not necessarily include fees. So at some point, I really want to know what we have paid out in fees and penalties based on these mistakes. I need to know absolute numbers, please. Like not, oh, I think so, or maybe, or, because I'm hearing a lot of that, and that's the way I find central office benefits from lack of transparency. I need to know absolute numbers, please.
We would definitely have to bring it up to date to what we owed, and then on top of that would be a penalty/fee. So what you're wanting to know is, what is the total penalty/fee?
And I'd love to know a category of each, please.
Okay.
But yes, I would love a sum total, but then I want to know how it's broken out, please.
Okay.
Thank you.
Mr. Bates?
Thank you, Chair Parker. Mr. White, thanks for coming. Appreciate your office coming and meeting with us. Sorry, I was running a little bit behind. Wasn't able to get here earlier for the introductions. But, of course, I've tried to look over this audit. And for me, like Ms. Parker, it's a lot of this goes over my head. I could read it 10 times and probably still not understand it. And when I get about a few pages, 2 or 3 pages in, I start nodding off a little bit with some of the accounting terms. But I do appreciate you're here, and I wanted to ask you a little bit about some of the terminology that you use in the audit. I think if I wrote, or if I'm looking at this correctly, what you were talking about is these general ledger payroll liability
That's true.
ledgers or accounts.
It's the accounts on the balance sheet.
Okay. So help me to understand what a payroll liability account is. And I'm going to maybe ask you, maybe in my simple mind, the way I understand it, and you can maybe correct me and help me to understand it a lot better probably. But is it that each month, say for example, each month that we have school board meetings, we're supposed to be paid a certain fee for our meetings, for attendance, the school board members are. Before we're paid, when we know in the month of, say, the month of April, that payment is going to have to be made, does that go on a payroll liability ledger until that obligation is fulfilled for that month?
Similar to that, that would be like an accrued payroll liability. What we're talking about here is pretty simple. It's your employees sign up for all sorts of insurance. They got money they pay into TCRS. They got money they pay for dental insurance and medical insurance. Some of them have credit union accounts. They're all administered through the office. Whenever their paycheck is run, the money's taken out of their paycheck and becomes a liability on the balance sheet until such time as it's actually paid in to that insurance company. That's the kind of thing we're looking at.
So like for the month of April that we're in, if we know that an employee is going to receive X benefit towards an insurance company, that's then goes on the payroll liability ledger?
At the time that they're paid, yeah, when their paycheck is generated, the money's taken out of their pay and they get the net check.
Okay.
Well, that amount that's held out then becomes this liability until such time as the bill comes in for it and the board pays it.
Okay. Now, this might be helpful to give me a little bit of, give us all a little bit of background and understanding as well. It's my understanding that as far as the funds that are used to pay, that the school system doesn't actually hold those funds. Those are actually held by the trustee's office, is that right?
That's correct.
Okay. So for the month of April, employee A is entitled to a benefit, whatever that benefit is, and that goes on the payroll liability ledger. In some ways, some sort of communication has to go to the trustee's office that, hey, we need this much money to be able to pay for this liability.
Well, the bill is paid by the board. The money comes out of the trustee's account.
Okay.
When the bill comes in, you should be reconciling that bill. You take it, let's say it's the dental insurance bill. It comes in, you've got a list of all the employees that have got dental insurance and how much they owe on their insurance. And you check that bill and you make sure that those employees are still working for you and they really do have that insurance and that bill's correct. And at that point, you cut a check to pay it.
Okay, so when that dental insurance is paid, then somebody's supposed to go back on the liability ledger and do some sort of entry to be able
Yes.
to show that, oh, it was paid.
Yes.
Okay. So,
As the payroll is run, the liability increases. When the check is written out to the insurance company, it decreases.
okay. So could you have some scenarios where the check is actually getting cut to the dental insurance company, but somebody is failing to go back and do an entry so that it still looks like it's a liability, even though that liability has been satisfied?
That is a possibility.
Okay. And is that some of what you're talking about when you say that there are several general liability payroll liabilities that I guess haven't been reconciled?
It is, yes.
Okay, so actually the check went, somebody just failed, like with my checkbook, it's like I paid the electric bill, but I just didn't go back into my ledger and write down that I actually wrote the check to the electric company.
Well, we can assume the check went, but I don't have any proof that it did.
Okay.
That's what my problem was. I
But-
didn't have
but-
any documentation of what the true liability was at June 30.
Sure. But assuming that does, say that's accurate, that I got an electric bill that comes in, I send a check to the electric company, and then I fail to register it in my register, that's still going to show up in my account as a liability, even though I really did satisfy the
That's true,
liability.
yes.
And that's actually, that's what I want to ask about as far as that particular situation. I want to get a little bit input from staff. And is it Elaine? All right. So, Miss Elaine, when you came on board in, I guess, was it January of 2017? I guess it was a little bit of a whirlwind back then when you came in. What was it that you were finding out as far as where payments were going to insurance companies, were employees going back in the process and making an entry to show that they had, in fact, made that payment?
I wasn't involved in all of that in the very beginning. What had come up was we didn't realize things until probably February, or, you know, it was probably around February when some of these things began to be realized when we were checking them out, because we were hearing that some things had not been paid. And so then we started to go back. There had been quite a few things, a lot of the liabilities that had not been paid, or they had cut a check, and we're still not quite sure why they would do this, but they cut a check and cut out the signature. And we just found stacks of these. And so it took a long time for us we still hadn't quite figured out why anyone would do some of the things that we had found.
Now, was it, they were thinking that they had to print an actual check for it to do some sort of entry within the system that the payment had been made, or?
So then possibly they were stacking up these supporting documentations, if you will, at some point to do the entries, and then the person left or whatever, and the entry didn't get done.
Okay, so payments, in some situations, payments were not being made.
Correct.
But in some situations were you finding out that the payments actually were being made, it was just a matter of bookkeeping that they were failing to make an entry to reduce that liability?
Yes.
Okay. Now, where are we at in the process? Is there some reconciliation that's going on to go back and to try to make those adjustments as to what should be the accurate payroll liability?
As of the end of our audit, we did not have any documentation that could do that reconciliation.
Okay. Is your office working with our office on that process to figure out what that should be?
No, sir. Not
Okay.
at the time, not at this time.
Okay. Is your office, Ms. Gagliano, are you all doing that homework to try to figure out what those reconciliations should be?
In answering this audit finding, we were able to go back and try to piece together the totals that the auditors were able to find. And then, as it says here, we identified the federal income tax, Social Security, and Medicare. So, again, we were trying to piece together something that we weren't involved in. So that was our best attempt at trying to provide an answer. So going forward, which is really only what I can speak to, there will be a process in place where we won't find ourselves in this situation.
We are working on it.
Because if you're not making those entries on a monthly basis, I guess it rapidly gets behind as far as trying to get caught up and try to sort that out. Okay. Thank you.
Question. Are we up to date? Are all the past due insurance now been reinstated?
Yes, ma'am.
Okay.
We're not behind on any of our benefits or any of the payments for payroll taxes or any of those things. We are up to date. Yes, ma'am.
Mr. White, I noticed in, I guess, our responses to y'all, we said that general ledger accounts had not been reconciled in previous years. Would that have resulted in an audit finding in previous years?
It would.
Okay. So I guess that was one of them that was present in a previous year. And then did our corrective action plan, was it just not followed?
Can you answer that? It was the prior year finding. However, in the prior year, our finding said that they had not reconciled on a monthly basis to keep up with their liabilities, to make sure that the bills were correct. They'd simply paid the bills. This is different this year in that we got to the end of the year, we had balances there that we simply couldn't confirm at all. And therefore, at the end of the year, there's a large portion of your balance sheet that's basically unaudited. That's why we stepped back and couldn't give you an unqualified opinion.
If I put it another way, when we say documentation for that liability account, there should be a list that says this is the amount in this account that's owed to the dental insurance, this is the amount that's owed to the IRS, and there was never a list presented to us that reconciled back to those numbers on the balance.
So going forward, staff, do we have that list so that this, at least that part, we can at least provide them with documentation? Because I'm sure it is very difficult to audit something when you have no supporting documentation. Is that pretty uncommon?
Yes.
Did y'all understand what they were asking and just
We
weren't able to
did,
provide it? Or
we were limited number of people doing a whole lot of cleanup work. And I take responsibility for some of that because, you know, when you dig into something and something just doesn't seem right, you dig even further to try and figure those things out. And we just didn't have enough time to get it all done. So we are in the process of getting certain staff members in the accounting department responsible for some of these, so it's not all on one person, and then have someone check it from there. So we're just starting all of that, but we do know that everything has been paid, but now that we've made the audit adjustments, we will go back and rework from July 1 to the current.
okay, that was one of my questions. So you guys are actually going to go back and look at
Yes,
July,
ma'am.
August, September?
ma'am.
Because starting from April 1 is not going to help us on next year's
No,
audit.
we have to go back to July 1,
Okay.
and we will do that.
Okay, thank you. Any other questions on this particular finding?
Once we satisfy all the questions on this finding, can I ask that we take a step back? I just need kind of a bird's eye summary of this. Like, I don't have a point of reference. I've never really delved into an audit before. I just need, you know, is this expected sometimes? Do you come up on this often? Is this, you know, how often do you come up? I would really love a bird's eye view if I could, an explanation.
I tried to anticipate this question coming up. So I went through the 21 counties that my group audits each year for the fiscal year ended June 30, 17. Out of that, we had 59 findings, total findings for the county, schools, highway department, the statutory offices, clerks, trustees, sheriff, register of deeds. So we had 59 total findings for the year out of 21 counties. School findings, out of 21 counties, we had 15. 11 of those are here in Murray County. So out of 21 counties, I had 4 school departments with findings. And material school findings, we had 5 here in Murray County and none in the other 20 counties in Middle Tennessee. So will you see this type finding? You will from time to time. However, it's usually not material balances that have gone unidentified or that we cannot identify. So typically that finding would not change our opinion on the audit, but in this case it did because there were large balances. So I guess to answer your question, we have that finding from time to time. Usually it's not material. It's not a large dollar amount, so it becomes a finding, but not a material weakness. Does that help answer your question?
I think I'm looking for a point of reference, and I think that helps me a bit. I think one thing, I'll just kind of tell you what I struggle with. I definitely can appreciate the difference in public and private. I'm from the world of healthcare, and there's a difference in public healthcare and private, public medicine, private medicine. Our goal is always the same, to provide good, safe, and efficient healthcare, but it's 2 different routes. From a business standpoint, I have insight into more of a private model, but this would so never be tolerated in the amounts and the duration. And I think I'm really struggling with this as far as like accountability. I feel like as a board member, I have a responsibility to do things, to hold things accountable, to be done well, and for money to be spent efficiently. And that's not, a lot of this is Greek to me, so I'm hanging on every word, trying to get a better understanding. But I am very perplexed, and this seems very like poor management to me, and that feels bad from the seat that I sit in. And I just need y'all to speak to, am I reading more into this than I should? Or this is a problem, right? Like, and I appreciate that Karen's saying that they're doing things to do it differently, but I feel like this has gone on for a long time, and I've said this many times. The board's heard me. I feel like we have a CEO that at the end of the day is responsible for ensuring that the people under him are diligent and have adequate knowledge to do a job well. And I'm just not really hearing any responsibility or accountability. It's just, oh, these are problems, and I understand we're moving it forward. We are fixing it, and I'm very glad for that. That is something we have got to do, but at the same time, I feel like, I know some members had even, verbalized that they were concerned about Alice Birkin's qualifications, and I feel like that was dismissed, and I feel like it's just allowed this to go on. And when I know that there's some findings that were there last year, I just need someone to tell me, is this as big of a deal as I feel like it is?
Well, that's why I tried to summarize those audit findings to give you a snapshot across Middle Tennessee with the other systems. out of those other school findings, one was related to backing up information system reports or records. One was related to not setting aside escrow on a construction contract that's required by law in an outside bank account. The two other findings in one system, one was related to an investigation that was performed on their child nutrition program, and the other finding was related to budget deficiencies, and some of those were probably similar to the budget deficiencies that we note over here. But 11 out of 15 were Murray County schools for 21 counties, so that's serious in my book, but that's it's subjective to me, of course.
So I'm a simpleton on this stuff, but, you know, we pay the finance department to do this, right? That's where this stuff should be captured, monitored, paid, documented.
Yes.
Okay. Well, I nearly fell out of my chair up there when I found out how much we paid VACO. I think it was a lot more than any of us had anticipated. And they've heard me say it, but y'all haven't. I'm in my world, like I worked agency nursing for a while, and I know what my paycheck was, but I knew what my company was making on that, and I feel like that's what we were just paying VACO, which I said along the way, that's just not efficient use of our funds. But, you know, when we talked about it, you know, we needed to hire a CFO, but we just seemed to drag our feet. So this went along. We kept paying VACO. In my mind, it was an inefficient route, but we paid them a whole lot of money, and then we've got this mess. But at the end of the day, our CEO is responsible for who's running the finance department. And this is a big deal. So I'm just trying to wrap my mind around, is this a big deal, yes or no? And then I'm one of 11 people who I feel like it is our job to hold things accountable for being done correctly. So I'm just trying to wrap my mind around how big of a deal this is, and are we doing what we need to do to ensure that whether it's finance or other things, the proper management is taking place? So I think what I'm hearing you say is if there were 15 total and we had 11, that's pretty impressive, or pretty serious, as you said. Okay, but sorry, it's not really what we're here to talk about, but we paid an awful lot of money for this mess. So thank you for helping me get a good understanding.
Sure.
Thank you, Madam Chair. Part of the explanation we've received is this, that Ms. Birkins was not familiar with school finance. How much difference is there between standard financing practices or CPA practices and school finances?
Well, that's not an easy question to answer, because there's all different accounting systems and softwares and methods. County government has its differences from the private sector. The school department has to operate within certain guidelines related to the State Department of Education. But any accounting system that we look at is going to have what we consider basic financial statements. And those basic financial statements are going to include a balance sheet at the end of the period, which is June 30, 2017 for this audit, which is essentially a snapshot of where the agency or the government stands at that point in time. It'll also have an operations statement that details, if you're familiar with your budget, you have a beginning balance, beginning fund balance that you start the year with, revenues, which are going to increase that fund balance, expenditures, which are going to decrease that fund balance, and an ending fund balance at the end of the fiscal year, which would be June 30, 17. So those basic statements have components, but you're going to find those in any double-sided accounting system that I'm aware of. Now, there's single entry accounting, but I don't know anybody that uses that other than maybe we in our own personal checkbooks. I deposited $200. I wrote a check for $500. That's single entry. Double entry, it's going to impact the balance sheet, and it's going to impact the operation statement at the same time, and those two should stay in sync all the way through the period. And at the end of the period, the ending fund balance on the operation statement should equal the fund balance on the balance sheet. So if someone says, the person may not be familiar with school department accounting, that may be true, but those basic financial statements and operations are found everywhere. However, the software could be completely different in, say, a hospital. You mentioned the healthcare industry. The software may be completely different there than what is used in a county school department.
But somebody with a doctorate degree in finance should have been able to have made the comparisons or figured out the differences.
I would think so, but I can't really speak to an individual. I never met this lady.
Okay, thank you.
Thank you, ma'am. Sir, you mentioned that you're responsible for 21 different school districts.
Mm-hmm.
And what's the size relations from Murray County to the other 20 districts?
Okay. Well, out of these 21 districts, on the smaller side, we deal with Moore County, Lynchburg. It's a small county. We deal with Trousdale County, that's Hartsville, and it's another small district. They're clearly both smaller than Murray County. Then we have other smaller systems within that range, but we also would have systems similar to Murray County, and we have several. We probably have 6 or 7 that are larger than Murray County. So we cover a spectrum from small to large and in between.
Okay, so Murray County is basically right in the middle of average or close to it?
Maybe a little above the middle range, maybe.
Okay, all right, thanks, sir.
Sure.
Hey, Chair Parker. Is it Mr. Bailey?
Yes.
I'm sorry. And I guess you're over the Middle Tennessee
I am.
Area.
Mm-hmm.
And I think you mentioned, so this audit is kind of a snapshot of the fiscal year ending, is it June 30th, 2017?
Correct.
And I guess it's, for the fiscal year, you'd be starting, what it would be, July 1st, 2016.
16.
So for that
Correct.
fiscal year. And I think I know the answer to this, but if the fiscal year closes on June 30th and then we don't get the report until March as to what that audit was, is it just that you all have multiple counties that you have to go through, and so it just takes a while and manpower
That's
to be able
part
to get
of
through
it.
that?
It is. The Murray County audit this year we typically divide the counties in Middle Tennessee kind of in 3 waves.
So they have like different
7, and 7.
schedules,
So
yeah.
Murray County was a 3rd round county, but I think we arrived here to finish the audit in October. Yeah, we actually got here earlier than we anticipated, and one thing that I didn't want to do, because knowing the background of what's happened here and the turnover and the hiring of VACO, I did not want my auditors to rush through the process, number one, but also if someone's dealing with trying to straighten out a mess,
So you
something,
don't want to get in the way of things.
well,
yeah.
and something, if we needed information 2 or 3 days later, I instructed my auditors to give maybe a week to 2 weeks. Trying to be as understanding as we could be. So that's one of the reasons that the audit wasn't released until the middle of, or we didn't finish our field work until the middle of February, was we tried to be as understanding as we could be. We had to document all these 11 findings in our working papers, and
So it takes a while. You just can't
it
just
does.
pop
And-
in one day and you're
No,
ready to do an audit.
No,
So,
and also, of course, school departments typically close for maybe a week and a half or 2 weeks at Christmas.
Right.
And I think Murray County Schools closed maybe 2 different times for sickness and maybe for snow. So those things delayed our process. Again, we wanted to be as understanding as we
Right.
could be in this situation. So that's one of the reasons we were here from October until, now, I don't think we came directly to the school board in October.
We didn't.
But we ended up here and we went through the middle of February with our
Gotcha.
field work.
okay. And of course, you, in your report, and I appreciate you all sending us a copy of the summary of the audit findings for the board so that we have kind of that out in front of us. And that is concerning all those things that you all have pointed out to us. And I'm very adamant that management take a very good look at that and fix all those issues promptly. I do want to ask you a little bit about the bigger picture. I know Ms. Powers was asking about the bigger picture as the audit. At the end of the day, the audit is to present the financial situation as of June 30th, 2017. And we want to be able to have something that we can all rely upon when we're looking at fund balance and looking
Sure.
at these other figures. And looking at the actual report that was signed off by the comptroller, if I've got that in front of me, and I don't know if you all have a copy of the
I do not have a
Audit
copy
letter.
of the entire audit in front of me.
Okay, so I'm referring to what's at the front of the audit
Mm-hmm.
that Mr. Wilson signed at page 14. And he does point out on page 12, and I've got a copy of this if you want to come and look at it, maybe.
Okay,
help
well, what's your
me look at it.
question?
Well, my question is, so I'm looking at one section, he says there's a basis, there's a qualification that he puts in.
Mm-hmm.
And he says that basis for the qualified opinion is that management was unable to provide documentation to support the valuation of several general ledger payroll liabilities in the general purpose school and school federal projects fund. So that's what we talked about
That's
just
this
a minute
finding,
ago.
yes. Mhm.
So that's where he had a qualification to say, okay, I'm gonna go ahead and sign off on this, but here's my qualification here. Then he drops down and says in the next paragraph, in our opinion, except for the matter described in the basis for the qualified opinion that we just talked about, the financial statements referred to above present fairly in all material respects the financial position of the aggregate discretely presented component units of Murray County, Tennessee as of June 30, 2017. All right, that's a mouthful, but I want to go back and maybe you can help me. The way I understand that is what what the comptroller is saying in this letter is that he endorses the financial condition of Murray County with that one exception, that one qualification. But in all other respects, the financial statements present fairly in all material respects the financial condition of the county. Now, am I reading his report? And like I said, I've got a copy of his letter. if you'd like to take a look at
No,
it.
I understand what your question is. We qualified the opinion because of these payroll liabilities that we were not able to
That's where you want
obtain
the
documentation.
Right,
Yes.
right.
Now, the rest of the audit, we say, is materially correct. That doesn't mean that it's 100% correct. That means it's correct
Still
within
got some
material
criticisms.
limits.
Still got some criticisms.
Yes, I mean, we
Right.
still had findings, but
for
we were able
purposes
to
of
satisfy
go ahead,
ourselves
sorry.
on some of the other numbers, on the cash, on fund balance, for example, on the revenues, expenditures. We were able to satisfy ourselves within material amounts that those were okay.
Okay, so the comptroller's office is saying in this document is that we can reasonably rely upon this, with the exception that you all have this asterisk or qualification regarding
Correct.
these documentations on the ledger.
Mhm.
Now, that doesn't mean that you all don't have other criticisms.
Correct.
And I completely understand that. I'm not trying to discount that in any way. I'm just trying to look at
No, you're
the ultimate
reading
report.
You're reading it correctly.
Okay.
Yes.
All right, thank you.
Anything further on this finding? Move on to the next finding, finding 2017-003.
To clarify that last point just a little, that first finding we took, we were not able to come to an answer as to what your correct balances were, and therefore we qualified your opinion. All the rest of these findings, we did determine what the correct balances were, and we gave you audit adjustments, and we fixed those in your financial statements, and that is why we're able to rely on them now.
So you make, so you make the corrections or the adjustments, but you're still going to point out what some errors were in practice that were made that needs to be corrected.
Yes.
And so it's almost like a constructive process of,
We hope so, yes.
you need to fix this.
Yeah.
This needs to be changed. Okay, thank you.
Finding number 2, material audit adjustments were required. This is in addition to the payroll liability accounts that we discussed in the previous finding. In this finding, we found numerous material errors in account balances in the General Purpose School Fund, School Federal Projects Fund, the Education Capital Projects Fund that were not materially correct, and our audit adjustments were required for proper financial statement presentation. Audit adjustments were required to increase the property tax receivable by nearly $21 million. The allowance for uncollectible property taxes, $474,000. The deferred property taxes, another $20 million. It's a balance sheet entry to record property tax receivables at year end that was not made. Other receivables, there's a net there, a change of $1 million that we had to post, but it's made up of a number of things. What we found was that accounts receivable from the prior year balance sheet were still sitting out there on your balance sheet. They'd never been cleared off. That was $1,752,000. As the money comes in during this current year, rather than treating it as revenues, which was double counting, it had already been treated as revenues in the prior year, you're supposed to just take that and journal entry it off to reduce that receivable balance back down to zero again. And that didn't occur. So what it amounted to was you double counted about $1,752,000 in revenues this year, and that amount was still sitting on your balance sheet as a receivable, and then you posted this year's receivables on top of that. So that had to be adjusted out. There was one receivable in there that was from the prior year that did need to remain. That was indirect cost that the Federal Projects Fund owed back to the General Purpose School Fund of $106,000. They'd owed it for a year and that had not been repaid, and we gave an adjustment so that that could be paid. Then we set up another $2,859,000 for local option sales taxes for July and August receipts that had not been posted. And that's about what makes up the receivable entry there for the General Purpose School Fund. Okay, in the construction fund, the Education Capital Projects Fund, there were a number of contracts payable which had not been posted. We set up contracts payable of a little over $3 million and retainage payable of $41,000. In the School Federal Projects Fund, it's a little bit difficult to explain, but what happened was at the beginning of the year when you changed over to your new software, you had to load those numbers, those beginning balance sheet numbers, into the software. And in error, they were duplicated. In essence, every number on the balance sheet for that fund was doubled. And that remained uncorrected until we found it in the audit. And that pretty much tells the tale, I think, for that finding.
So, Mr. White, when we're looking at, we get financials every month. So, based on this particular finding, would that mean that we were overestimating what we had, thinking we had an extra $1 million that we could spend on keys or things like that that we really shouldn't have had? Is that essentially what this means?
Potentially so, yeah. It means that your balance sheet was substantially in error during the entire year. Yeah.
Substantially in error the entire year. Okay. I noticed in the statement that we gave to y'all on this particular finding, it says that the district chief financial officer will lean heavily on the auditors and their support with clear instructions to ensure we are materially correct in our entry by June 30th, 2018. I know Mr. Parliament was here last year, but did you guys make yourself available to him as well?
We did. Actually, for the property tax receivable entry, we had given him the calculations so that he could calculate that, but it just didn't get put on the balance sheet. I can't tell you why.
Gotcha. So you guys actually did help and do essentially what this corrective act, what this response said, maybe if you wanted to read into it, it says didn't happen, but you guys were available and actually provided the information that just needed to be put in and just was not put in.
To some extent.
Okay.
No, we didn't come and determine what your receivables were. That large property tax receivable is a calculation done every year. Basically, it's put on the balance sheet at year end to determine that liability. We knew that it had been a problem in the past, so we showed him how to do that, and it didn't get posted. I can't tell you why. For the other receivables, we did not have any part in determining what those would be. We anticipate coming in at the end of the year and being given a schedule of all the receivables that you've set up. We then audit that receivable schedule to determine if those amounts are correct and if there's other amounts that need to be added to it. But that didn't happen either.
Okay, thank you. Are there any other questions on this particular finding? Seeing no lights, we can move on to the next one. Finding 2017-004.
The office had deficiencies in budget operations. Several budget amendments were posted in the General Purpose School Fund that had not been approved by the County Commission. And in those cases, we had to remove those budget entries. Obviously, that changed your overall budget for some line items. Total expenditures and other uses in your General Purpose School Fund exceeded the total appropriations approved by the Commission by $327,664. That's saying that not any individual line item, but all of them in total were overspent by that amount. And then you see a schedule there. Expenditures exceed appropriations in the following major categories. And a lot of this was caused because there were numerous expenditures which were not properly posted on your books, and when we found those, we had to post them, causing your expenditures to, increase substantially, and they overspent the categories. And then finally, salaries for line item appropriations in 14 instances were overpaid by amounts from $162 to $60,000. I think we've discussed this maybe before, but salary line items cannot be changed without budget approval. They have to go before the commission for approval.
Ms. Kinzer?
Would you say that again? You're saying there were 14 instances which people were overpaid?
No, ma'am, I'm saying that there were 14 line items,
Okay.
or salary-type line items within your budget that were overpaid. Not necessarily individual people, because some line items contain, like, principals, for instance, that sort of
Okay.
thing.
Okay. So it might be several individuals in that line item were
It could
overpaid?
be. It could be.
Okay. And how long did that go on? Do we know?
I can't really tell you how long it went on. This is a measurement of at year end, how much it
Okay.
had exceeded the approved balance.
It just kind of blows my mind because how there can be overpayment when we have a salary schedule and we have degrees and experience and all that, and it should be pretty clear what a principal or teacher makes because they're under contract with, 10 or 12-month contract. So I just don't understand how that happens. I really don't. I'm not asking you, it's just, I don't not understand how it happens.
Probably about, counting salaries and benefits together, that makes up about 82% of your budget. So if they're set up incorrectly, then your budget's going to be incorrect. So yes, during the year, the budget is a plan, and things change, and you have the ability to do amendments to keep up with those changes. But, I think, and again, I wasn't here, but I think there was some confusion about 10-month, 12-month, 11-month, the way it covers into July. So there was like a number of items with salary, but I think with the principals, that wouldn't have been the case because they're 12-month, pretty straightforward. I think it was just the teachers or the instructional side for the other issue. But again, it's set up as everything, so.
And please let me clarify, I did not mean to say that your principals were overpaid. I was using that as an example of what a line item was.
I absolutely understand. And I'm really not referring to so much as to what you said as to how that happens continuously, that anybody be overpaid if they have, a salary that's been determined by board policy or whatever. That's,
Just one more thing with that, just for understanding purposes. We're talking about a line item in the budget for maybe a number of salaries. So another way that it could go over is that possibly you have a set number of people that are already here that you know what they're going to make. But then you hire a new person, and maybe they have more experience than you budgeted. Maybe you budgeted middle of the row, and you got someone with more experience. So that bumped up what was charged there. So then you would be monitoring that, so you would do a budget amendment to cover that from somewhere else. But that didn't happen. So it's not just like an individual, yeah.
okay.
Mr. Bates?
Ms. Gagliano, maybe you can help me with this, and Mr. White, is that right?
Yes.
Maybe you can as well. I'm not sure if this is what the issue is on this particular finding, but I know that in the past, we, as a board, we've come up with a budget to use some of our fund balance. So we would try to go through the process of figuring out the budget, and then we knew that, okay, we had a certain amount of fund balance that we could use for the year, and so we would go through a process of trying to figure out, okay, how would we use that money? For example, buying computers or leasing computers. And I think that's we didn't set that up properly. I think that's one of the findings too, as far as how that's capitalized. But so we had money, we approved the use of the money, but Mr. Gagliano, maybe you can help me with this. Is it that the money was earmarked for use, like for computers, for other uses that we approved, but it was just earmarked as almost like encumbering the fund balance in kind of like a general type thing? And what should have happened once that was approved to use the fund balance, that money should have populated all those individual budgets. And so
Correct.
because it didn't go through that process of populating those individual budgets, even though it was approved and it was sitting there and it was earmarked, it would cause those individual budgets to look like they were being exceeded, even though the money had been allocated. Is that some, and I'm not sure if this is the particular finding or maybe it's a different finding, but is that some of what you were finding when you were kind of going back and trying to
Yeah,
figure out
mostly,
how the situation happened?
mostly items that had to do with the keys expenditures. The board approved the purchases, as you mentioned. And the money was initially sitting in an undesignated fund balance state. And then when it was approved, it was moved to a designated fund balance state to set it aside for the things you wanted to buy, when it should have been put into the expenditure side of the budget.
So going from a general category into like
From a
getting
fund
split up into
balance,
all those specific
right.
categories.
So it should have been outlined into all those expenditure accounts so that when you went to spend it, there was money there. Instead, it came straight from fund balance to pay for that. So it's an accounting thing that, like the approval process was there, but the follow-up accounting didn't occur.
Thank you.
I might interject one thing. There's also a legal issue because the school board and the county commission have to appropriate any money to be spent. Has to be appropriated before it's approved.
And it may have been a process issue maybe that needs to be improved, but each one of those budgets went to the county commission. The fund balance, keys budget went to the county commission, as well as the operating budget, as well as the capital. So it was all presented to the county commission. It may have been that maybe the form should have been improved, and maybe for future purposes, there needs to be maybe, here's the operating budget, and here's the operating budget if you approve these fund balance things, so that they see, okay, this is what the final populated operating budget would look like if that fund balance is approved for use, so.
Ms. Powers.
Karen, I have to say, I really appreciate all the speculative thought processes you're offering. You're doing a good job. I think those provide a very well-intentioned deflection. I really need to hear from the man that I was paying, who was here, because I very much appreciate your speculation at a time when you were in Oak Ridge and we were here. I would really like to hear from you, Dr. Marzak. You were here, and when I have learned a lot in my 3.5 years on this board, a whole lot, but I did learn in School Board Member 101 that our money had to be approved by the county commission. So I just heard some things that, $327,364 more than the county commission approved. Like, that's kind of a buzzword that we've stepped over the line, but that's not the way the system is supposed to work. So I really appreciate Karen speculatively speaking to what probably happened. I need to hear from you that was our CEO at that time. This is a big deal.
Yep.
This
So-
would not be tolerated in companies that I am familiar with.
Yes.
It would not be tolerated.
And to my knowledge, the process was followed correctly. I learned during the during the audit process that it wasn't followed correctly. And so what Ms. Gagliano and I have sat down and discussed is, knowing what we know now, what do we need to do different moving forward? And her response is, well, we're already working on that. And that was some of the budget amendments that we took care of this past spring with regards to the Q accounts that she's already jumped on and she's already taken care of. So according to my knowledge, I thought we had done it correctly. And I found out during the audit process that we did not. So we've already worked to fix those things.
Well, the other night on Channel 4 News, I heard you say that you would not do anything different since you've been here.
No, the question was regards to the situation with regards to the student and the teacher. And they said, would you do anything differently? And my answer was, I wouldn't have done anything differently.
I think the question was asked in two different contexts.
Okay.
One was, did speak directly to that, and the other was in general.
I can only comment on the question he asked me on camera. That's all I can comment on. That's what he asked me the context was.
Not that I saw.
I don't know how they edited it.
I
didn't watch it. I didn't watch it, but he asked me with regards to that situation, would you have done anything differently? And my answer was no, we would not have done anything differently.
There were two different contexts in which were asked.
Okay, I can't comment. I didn't see it, sorry. Yeah, I can only comment on the context in the question which he asked and which I answered it. I didn't see the news report. I didn't see how he edited it.
Dr. Marzak, I wanted to follow up. I know you said that you're working with Karen on the process now, and that, to your knowledge, up until the time you got this audit, you thought everything was fine.
Yes, ma'am.
But I went back and I pulled up our audit from the previous year, and this was a finding on that one. So I'm not understanding why you thought everything was just kosher if it was on our previous audit.
I can only make assertions and statements based on the information that's given to me, based on what's shared with me and the information that I have at hand. So, to my knowledge,
We have the same problem.
yeah, to my knowledge, I was being told that everything was on the level and everything was being followed correctly. That's all that. So when I find these things out, the only thing that I could do is talk with staff and make sure that it's followed correctly from here on out.
So the first time you knew about stacks of checks was when you got the audit finding?
Stacks of checks. What do you mean by stacks of
The
checks?
stacks of checks that had been, the signatures, I think Ms. Gagliano and Ms. Coe just mentioned it. In the previous one of the previous findings, but they said that there were stacks of checks in the office that they had to go back and try and reconcile.
There we go. I don't, excuse me, did not have the conversations with Dr. Marzak. That was,
Mr. Parliament.
you know,
Right.
I don't know.
Right.
I just know what I saw, and this is, again, in the middle of all the chaos when we first came on, that we're finding all of this stuff and trying to figure out what were we supposed to do with it, why is it where it is?
And I'm not faulting you. I'm just saying that we all have to make decisions based on the financials that we're provided. And if the financials that we're provided have material defects in them, which we're hearing tonight, they've had material defects for over a year. And we've been spending money like drunken sailors, quite frankly. In a lot of cases, that makes it really hard for me to feel like I've been doing my fiduciary duty. And so that's why I'm asking Dr. Marzak, when he knows about some of this stuff, why are we not being made aware of it? Because like he just said, he can't make good decisions if he's not getting information from y'all. But if you're filtering it upstream, then it should filter downstream to us, is how I look at it. And maybe I'm wrong. But going back to this particular item, I mean, salaries, it's not really a finance thing. That's something that would be set up in Skyward anyway. So if you have overpayments, is that an HR issue or is that a finance issue?
With regards to the budget, it depends upon who's responsible for what when you're setting up the budget, because, like I said, it's a huge chunk of it. As the budget progresses and you actually apply expenditures to that, in the example I gave where you hired someone higher than you budgeted for, then that would be a monitoring of the budget. But the initial setup would have to be good to, carry out through the year and have enough funds in that account, or too many, or vice versa.
Ms. Bowers?
This is not directed at y'all. but I'm so sorry, but the accountability of this is what just eats me up, because this is what goes through my mind. Setup is everything. Okay, I'm so sorry y'all have to be dragged through my medical analogies, but if I set up an IV pump for a patient that needs medicine to keep their blood pressure up, okay, well, I do a series of calculations and I set up the pump. If I set the pump up wrong, the medicine still goes in. The patient still is going to suffer the consequences. So, like, I hear you, the setup is everything, but we have the consequences. But I also struggle with the fact that I have lost confidence in Dr. Marzak's truth-telling. And so, like, he's saying that he didn't know about it. Well, going back to Whitthorne, I told you specifically what was going on, and you did nothing. Fast forward, then you're like, oh, I didn't know anything about it. And it's not true. No, it is. This is speaking to Dr. Marzak. This is his standard. I didn't know. I didn't know. I can only deal with what I'm told, but I've seen him absolutely cover that up. So I just have to speak to, I don't like when people don't tell the truth and cover things up. It bothers me.
Okay, and for 2016, one of our findings was the deficiency in the payroll. And it says here that it was not corrected. So once a finding is corrected, do y'all verify that it was corrected, or how does that process work?
We do, sir. Any finding that we have in 1 year, we're going to check in the next year to determine whether it's a repeat finding or not. You're getting a little far for me. I didn't bring any paperwork on that audit. I do recall some of the specifics of it, though. That issue actually occurred in the 16-17 year, but it was so late in the year that when we were doing that 16 audit, that we went ahead and picked that. It was current information at that point in time, even though it was going to be truly occurred in the next year, but it was current and relevant at that time, so it was included in that audit. Yeah.
Okay, all right. Thank you, sir.
All right, I think we can move on to finding number 5.
Number 5. The school department overpaid several of their former employees. Some former school department employees continued to receive payroll checks for several months after they'd separated from service with the department. We noted that 7 employees remained on the payroll for periods that ranged from 1 to 10 months, and that resulted in an overall overpayment of $74,010. The school board incurred additional expenses for the employer's portion of Social Security and Medicare premiums of another $5,450. Since those above noted former employees remained on the payroll system beyond their actual service dates, the employees also obtained extended insurance benefits for which they were no longer eligible. The school department paid premiums of $6,314 for this unearned extended insurance benefit. The former employees were also not reported as having separated from department service in a timely manner to the Tennessee Consolidated Retirement System. The failure to properly report their respective separation dates allows them to receive more retirement credits, service credits than they earned. Additionally, the school board incurred additional employer's share expenses by paying $3,801 of the employees' retirement premiums after they separated from service. Now, that was these first 7 employees. Other than that, we found several employees received lump sum payments of accrued vacation leave in excess of the amounts that were prescribed in the employee handbook. The school board's policy allows payouts of up to 60 days of accrued leave, vacation leave upon separation of service. However, auditors noted that 4 former employees were paid for accrued vacation days ranging from 74.5 up to 146.5 days. And this deviation from your policy resulted in a total overpayment of $49,809. And then one other former school department employee received a lump sum payout of his accrued sick leave in excess of the amount prescribed in the employee handbook. The board's policy limits payouts of accrued sick leave to individuals to include only amounts that are earned in the Maury County school system for all employees that were hired after June 30, 2012. We noted that this employee was hired after that date on July 1, 2015. However, the employee received payment for sick leave that had been transferred from another system, and this deviation from your policy resulted in a total overpayment of $12,375. The grand total of these errors is $151,759.
I'm asking staff, when somebody retires, how does accounting know that they've retired and you no longer pay them?
What used to happen in the past was a form was given. So if you retire, and I brought the forms. We
I
used
know, I
this-
filled one out.
Yeah, we used this up to 2015-16, and then at that time, the person that was over finance decided that that form wasn't needed, and instead just wanted an email to come. So when the benefits coordinator does all of the retirement paperwork, at that time, once it's official, she will send an email to the finance department, to whoever's in payroll, letting them know how many days that person has accrued. What happened in this situation was twofold. Number one is that language is only in the administrator handbook. It's not in policy. VACO probably had no way of knowing that there was a cap because they probably did not go through and read
A
that.
cap
administrator
on
handbook.
sick days?
On vacation days.
On vacation days.
On
right.
vacation days. And then with this form not being there anymore, again, there was nothing to show them what exactly to pay. So we're going to re-implement this form. Not only do I sign off on this, but then also the benefits coordinator will sign off on this. That way they have something in writing, knowing when that person retires exactly how many days to pay.
Okay, question, 146, if it's in the administrator's handbook, which is policy, 60 days is all they can accrue and
Right.
be paid, then who turned in, I mean, I'm not asking individually who, but who is keeping up with it to the degree that they would think that they would be getting payment for 146 sick days?
Well, there's an account balance in
Because-
eSchool.
Huh?
There's in eSchool, which is our software system,
Okay.
that shows all of their balances, whether they be sick, vacation, or personal.
Teachers don't accrue more than 200 and those are lost.
Right, well,
Nobody
this is-
keeps them past 200.
Right, teachers don't accrue vacation at all. This is
I
just for
understand that, but
vacation.
you know what I mean.
Right, and then for sick, yes, then teachers can accrue those
mean-
days, but all of those are kept up in the software system.
But if you go to 201, that one just falls off the table. It's not kept up with because you've gone beyond that. I don't know why you'd keep up with it beyond 60 days.
Well, if they're an administrator and they get vacation days, they can accrue more, but once they retire.
And use them, okay.
Right, they're capped at 60. So they can accrue those the whole time throughout their career, and they can use those days if available. But they only get the payout of 60 days as a cap if they retire or terminate or resign.
So I'm sure they wrote real quick and said, y'all overpay me. You don't do that.
Yeah,
What did they do?
Nothing. We haven't heard from any of these. Now, our plan, of course, is to send a letter to these people, letting them know that they were overpaid and see if there can be some kind of payment plan made. Of course, they have been retired for a year, but see if there can be a payment plan made. We've also put in place for the sick days, the sick day policy that was in there about the 2012, that was the first employee that this has ever affected. This is nowhere in policy, again. This was in an administrator's handbook. And so in the past.
The administrator's handbook was adopted by the board.
Right, right. But in the past, everybody has been paid out at $50 a day for any sick days they have accrued. So this was the first one that was affected by this of 2012 hire date. And so when this person retired, he did get a payout for all of his accumulated sick days.
Well, your recommendation states that all lump sum payments to former employees for accrued vacation and leave should adhere to school board policies as stated in the employee handbook.
Yes, ma'am.
So that's a huge violation of policy, misuse of the handbook. I think that's embarrassing. All of it is, really, so.
Well,
But
and-
once again, let me ask the question.
Mhm.
What's the procedure? When I retired, I filled out a form, sent it to HR, y'all went yay, and then you tell accounting?
The Human Resources Department then lets a county know that that person is retiring.
Okay.
And then that's when a payout would happen. These forms used to be used, they were
And they're
cut
not anymore.
out,
Okay.
and that's gonna be
And
reinstated.
who verifies my sick days that I'm, got a lump sum check for?
There's really no verification. That's what these forms were for us to sign off on. So there's no verification. It's a balance that's in eSchool. That's where those days are from.
Okay, and I have heard from teachers that don't think that Skyward or wherever they are able to access or are not able to access them, that they can't reconcile their sick days. And I can tell you, mistakes were made when I was teaching, but I kept a little piece of paper every month. I had a folder of all, well, it wasn't that big, but, you know, because they made mistakes. It's just a matter of, you know, I had a sub this month, you didn't have it down. This is, you know, I used the personal days, whatever it is, and I just call, and it take care of it. So I knew that it was correct. A lot of them they don't know because they either can't access it or whatever. And I know that this is not you, but it speaks to the fact that teachers don't know, you know, there's been overpayment of teachers that are teaching now, have there not? Overpayment of teachers that are employed now. So I don't understand how that happens.
Well, we've sent two or three communications to teachers about how to go in, check their sick days, how to calculate those things. There's someone in my office that has went through and looked at all of those, audited all those. And so once an employee retires, those balances, we're looking at those and making sure on a monthly basis that those are correct. And then this form is going to help tremendously because that's going to let them know exactly what to pay. And while we're completing this form, we can do a quick audit and check to make sure those account balances are right.
I know when we decided to switch over to Skyward, that one of the things that was discussed was the fact that you had to you had to input things in one system, finance had to input things in another system, somebody else. There were like 5 different files that had to be updated. The question I have now is, now that we have Skyward, which was supposed to be the end-all be-all, are sick days correct between what you mentioned in eSchool and what you mentioned in Skyward?
Sick days are not in Skyward. We
Okay.
don't use the time off system in Skyward, and so sick days are not in Skyward. They're in eSchool. And
Okay.
eSchool is where they go to put in their absences and they can check those balances.
Okay.
And going back to that, the
Is that a module that we just didn't purchase when we purchased all the other things?
It's just nothing, it's not been implemented yet.
It's not offered at Skyward?
I don't know if,
Is it available for us to do now?
the time off, I'm assuming, you would know more.
We used it in Oak Ridge, and the employees could go in and request their time off in there. It was approved by their supervisor in there. There was an ongoing record of what was in there. As the new year started, it was updated with last year's numbers, this year's numbers total. You know, however your policy is set up, it complements that.
So are we currently paying for that and just not using it?
When we first implemented Skyward, that was a question for Ms. Perkins, and she at that time did not want to.
Guys, at
Start
some point,
using
y'all are
that.
gonna have to not pin it
Right.
on the
No,
person
I'm
that
just-
was
I'm
here
just- But
before.
I'm just trying to tell you the history
Right.
of why we're not using it. That was a question for, her, and she at that time didn't feel like that needed to be implemented, and a lot of it had to do with the way that we paid, that sort of thing. And also, when we first implemented Skyward, HR was responsible for part of the setup. Finance was responsible for the other part of the setup. We've now changed that into where HR will do the entire setup now, so we have one department doing setup from start to finish, which I think is going to help a lot of, and has helped tremendously, a lot of the payroll problems. But the time off system is definitely something we want to look into. We would love to have that. It's just a matter of getting it implemented and started.
So Dr. Marzak is the chief person. Is that something that you're in favor of being implemented? And if so, what's your timeline for getting that implemented?
When I was in Oak Ridge, it worked really well. It was easy to implement. That's something that HR and Finance and I will talk about, and we'll determine when's the right time to implement that.
Okay.
Because
When
we,
can you report back to us on, after that discussion?
after we talk about it.
I understand that.
It won't stand. It would be something that you'd want to do at a beginning of a fiscal year. So,
And I know, Amanda, you had mentioned the Administrator's Handbook. I know that's something that I know I've heard for like the last 3 years that we're gonna update it. Dr. Marzak, are we gonna update it? If so, when are we gonna update it?
We've had those talks internally in the spring semester about updating the Administrator Handbook. Can we look to do it for July 1?
What I would like to do is go to an employee handbook. Instead of having administrator handbook, support staff handbook, and a complete employee handbook, and break it down into sections for administrators, employees, support staff, and then licensed employees. So that's what we're looking to doing, is combining everything that way. Everybody's got one source to go to, and everything they want to know is within that one booklet.
One other clarification, though, I know we've talked about people getting overpaid and whether or not we're gonna get money back. I know that I talked to somebody who said that they came to central office at least 3 times to try to return the money or say, quit paying me, and it continued. And it didn't stop until actually her husband went down the 4th time and did not leave until it was addressed. So I'm not saying that y'all necessarily know about it, but obviously we need to work on those processes if somebody does want to reimburse us that money. And that money actually may still be sitting in an account that you guys, I'm not sure.
What we've been doing, the process of trying to get people to pay back is normally like payroll deductions. We've been working with the payroll person to split these payments out over the course of their next checks. I haven't taken any checks from anyone, so I don't know if.
This is a person that had retired.
Okay. All right, we'll find out. I mean, I know who that would probably be, but we'll find out why somebody didn't take her check.
Ms. Powers. Oh, I'm sorry, Mr. Dudley.
When did we recognize that form was not being used and that it was the fault of some of our findings?
The last time that we used it was 15-16 school year. So for the entire 16-17 school year, it was not used.
Right, when did we find that it was the cause of some of our findings in this audit?
When we got these findings, to recognize that there was some kind of communication breakdown and that finance, didn't know exactly the amount to pay.
I need a date.
Just when these findings happened. I mean, as I was going through these, looking and seeing what can we do to fix
Still need a date,
this.
January, February, when?
We received this in February, so.
Okay, and so we still haven't instituted its reissuance and use.
Well, what we've done in the interim is, we now send specifically, still by email, because we actually had a meeting today concerning this form, with finance and HR, but we send an email and it's specifically laid out, do not pay over 60 days. That was something that we're doing to make sure and ensure that they don't pay over 60 vacation days.
Okay,
But this form will be implemented.
When we find a fault in the system, why it takes 60, 30, 60, and 90 days before we implement a change or a correction. That's what is bothering me.
Well, and this just affects, this is for retirees, and so we've only had, I think, 2 or 3 that's completed their paperwork in this interim time period. A lot of them have already completed paperwork prior to. And we went back and we checked those folks to make sure that this did not affect them, and it has not. To our knowledge, no one's been overpaid on their vacation days for retirees.
Okay.
Just to clarify, please, Dr. Marzak, Skyward was your recommendation, correct?
Yes, ma'am.
Okay, and then you mentioned that you saw the module that we're not using, but you saw it in Oak Ridge, correct?
Correct, yes.
But you didn't recommend that we use it here.
No.
Can you inform me why, please?
Staff said, let's not do it yet. Let's stick with what we're doing in certain departments, so let's stay with what we're doing.
Okay, but you're the CEO, right?
Agreed, yes.
So like in our organizational chart, you're here and they're here,
Yes, ma'am?
and like they all do report to you, correct?
Yes, ma'am?
But it worked well in Oak Ridge.
Yes, ma'am?
So you had a history and it was positive.
Yes.
But you didn't encourage us to use something that had worked positively, although we spent an awful lot of money on Skyward and brought in this whole new software system.
Yes, ma'am?
Thank you.
I have a lot of teachers that have told me that they do not think their sick leave is correct. Is there a way we can audit that before July to make sure that teachers, that it's right? I think that's important.
Right, we've went through and done that, and on 2 occasions sent communication and asked them if they think it's not correct to please contact the contact person.
Okay.
And we had several, and we went through and either fixed those or explained to them that they were correct and why.
Okay.
So, I mean, we've done the communication, we can do that again. But we've went through and made sure that all sick time, and we're in that process, we've actually worked with eSchool themselves to make sure that all of that's been corrected. And it's just a matter of if they've got an issue, give us a call and we'll research and look and make sure it's correct. It is in hours and not in days in eSchool. So some of that confusion was they were calculating it based on an 8-hour day or a 7-hour day, and they work 7.5.
Yeah.
And again, we sent communication of how to calculate that time. But, you know, if they've got an issue, all they have to do is bring it to our attention.
So it's actually in there calculated by hour when the teacher day 7.5, why would it be in there 7 or 8? I don't understand.
That's the way eSchool works. They calculate it by hours. So when you pull up your balance, it's how many hours that you have.
I think we need to go use it in Skyward and put it all together where they can see one thing. It doesn't sound to me like it's working very well. And I know that there are teachers that tell me that they have no idea if it's correct. And if it's over a period of 3 years, which apparently maybe it is, they have a hard time, I'm sure, going back and proving that they were here or not or whatever, because there's no documentation.
Yeah, we can actually run reports to see what days they've taken off in eSchool, and then, of course, we know how many they're expected to accrue. So that's how we audit those records, and we'll work with them to make sure that it is correct.
Anything else on this finding? Ms. Bowers?
Well, I'm just, from what I hear from teachers and what I hear from you, they're 2 different things. And as I've mentioned, I've lost confidence. I think that commonly from central office, what we are told sounds better than what things really are. And in some of the statements that you've made, they do not align with what specific teachers have told me about sick time and about overpayment. It does not align with what I hear from people that it affects. And I just have to speak to that. We make decisions based on what y'all tell us, but I do not think what y'all tell us is accurate often.
All right, next one. 006.
The office failed to pay employee insurance premiums in a timely manner. And this is a repeat from the previous year. You'll recall that situation, you were having problems with payroll, and along with that, problems with paying these liabilities on time, resulting in some of your employees receiving notices of cancellation or potential cancellation. That had occurred and was reported in the prior audit. It reoccurred again in August of this year, or August of 17, that is. Auditors received a complaint that some school department employees were again receiving notices of cancellation of their policies in August of 2017. Our examination on August 24th of 17 revealed that insurance premiums for May, June, and July 17 had not been paid. The interim finance director advised that the school department had fallen behind on making the premium payments, resulting in American Fidelity Insurance Company issuing letters of non-payment to approximately 30 to 40 employees. The interim finance director further stated the delay in issuing these vendor checks was due to difficulties in reconciling the insurance invoices with payroll reports. The school department subsequently paid the outstanding invoices.
sorry. It's a repeat finding, so we knew that we were having issues with this. We had meetings about it last year. Why would insurance premiums not have been paid in May, June, or July?
Mr. White, I pulled up the FY16 audit finding, and this was not listed in there.
It is actually, it's listed underneath some of the other ones.
Because I just pulled up the FY16 finding from March 3rd.
I don't believe it has a separate heading, but yes, sir, it is in there.
Okay. Because I couldn't find that in the last audit finding. So if you read into the explanation and basically what we said, this was an issue between the current or the former interim chief financial officer and also the supervisor at American Fidelity, where they were working through reconciling the bill. But Mr. Long admitted that there was a breakdown in communication resulting in American Fidelity call center personnel telling employees that their insurance had been canceled. And then upon receipt of the employee complaint that brought us to our attention, the American Fidelity representative took over the communication with our employees to let them know the premiums were paid and the insurance was always in good standing. So according to American Fidelity, none of the policies had ever been canceled, and it was always in good standing, according to what we were told.
So this is actually, I mean, this says that we were not paying premiums, but the policies were always in good standing?
According to what we were being told by American Fidelity, yes, correct. They were always in good standing because we were working
Have them be
closely.
my insurance provider.
Yeah, we were working closely with the American Fidelity representative to reconcile those bills. And he was aware of what was going on, but he admitted that there was a breakdown in communication between the call center and between his office. So he took care of that.
So it's not our fault, it's the call center's fault.
Go ahead.
That's the second year of the finding, so how could, this is a repeat finding.
It was finding 2016-007, number B, or letter B.
So if we were good standing with a year ago one, that maybe y'all, maybe whatever, I don't understand it, how could it be a finding again?
Because it didn't get paid in August.
Right.
Well, it was the finding again because it occurred again.
Right, it wasn't fixed. Yeah, it wasn't taken care of.
Mr. Beaver?
Dr. Marzak, you're saying that the American Fidelity said it was their fault, a breakdown, from the communications department to the people calling in. Why would they send out letters saying you no longer have insurance? I mean, and I've seen several of the letters from teachers that, they had letters in hand from American Fidelity saying that their insurance had been canceled for lack of payment.
According to what was explained to me, American Fidelity uses a third-party call center that works off an automated system through technology, and that information is automatically transferred, and then the call center just does with the information that's received. So Mr. Long was unaware that information was transferred to that third-party call center, so he went ahead and contacted the call center individually. They had each of the people in their department contact the individuals individually and say, you're fine, everything's okay, we're taking care of it, don't worry about it. You've been in good standing and you're now in good standing, as was explained to me. So they contacted the individuals that were contacted, each one at a time, through American Fidelity. You're welcome, sir.
Have we had any issues with that this year, since that August?
No, ma'am, we haven't. I've been personally reconciling those bills, and they are being paid on time. What had happened in August was we did have a staff member, the actual Murray County school employee, and that was her job, and she left without notice. And so it took us just a little while to figure out exactly where she was at, because we had no notice that she was leaving. And when I realized what the issues were and knowing what had happened prior to us coming on, I personally took that on. And we had a meeting this morning with HR, and they're going to start helping with some of these because they know more of the changes than I do, so it'll make it a lot quicker. But we have not been late one time since August.
Mr. Dudley?
Okay, you're saying that you had an employee to leave unexpectedly on a short notice. At that time, how much time lagged between us feeling that she had completed all of her work up to the day she left?
It was fairly short after that, but she had come in, I don't remember when she was hired. I believe it was in May, maybe June, but she left in July. And this is a complex reconciliation. It's, you're dealing with 1,500 to 1,800 staff, and they have multiple things to choose from. So it's not necessarily an easy reconciliation. So it was after the end of the year when we realized that it had not, the end of the year as June 30th. It was in July, I believe. And so Mr. Parliament was on the phone with American Fidelity at that time, and we began having the conversations and having them help us get these things reconciled so that we could get them paid.
Okay, moving forward to today.
Yes, sir.
How long does it take us to have the reconciliation completed before we know that there's a certain level of accuracy in that?
It takes me 3 days to reconcile, and then we submit the paperwork for the payment to be made. And then in that period of time, then we are reconciling the liability accounts to go along to make sure that we've covered, all of our bases. But at no time is the payment delayed. Any individuals that I question go to the HR department, and we are working on that list now.
So we've shortened that period greatly.
Yes, sir.
Okay.
Ms. Bowers?
You mentioned that someone left on short notice and y'all kind of had to scramble to see where it was. I recall Eric Parliament standing here and telling us that he was going to help us from a systems standpoint and put procedures into place so that things like that didn't happen. Did Eric Parliament not do what he told us he was going to do? Was there procedures where someone should be able to step in and just see?
We're working on cross-training our department to know others' duties. That takes time, and we were, of course, waiting also for Ms. Gagliano to come in to give the guidance that was needed. Now, realize we weren't anticipating to still be here, so there were some things that I probably should have taken action prior, but I didn't. So when I found these issues, I personally worked on them, and they became my project so that we could get these things right and to work on the procedure. So yes, in a matter of speaking, yes, we do have procedures in place. I can't say what Mr. Parliament said or didn't say. I can just tell you what we've done.
I can add to that a little bit going forward. One of the things that I wanted to put in place was with the new job descriptions, I've set it up so that every position has a backup. So 2 positions, someone else is going to know the basics of what I do if something happens to me to hold things afloat. So that's what I tried to build into those job descriptions so that in the event that someone leaves abruptly or someone's hurt or something like that, that we're not scrambling to figure out what they're doing, that someone knows the basics until we can, take other action.
Karen, you have been a consistent voice to that, and you've said it, and I believe you that going forward that you're doing that. However, I'm early on in Eric Parliament's time here, he said he was going to do that. We paid him an awful lot of money, and I expected for him to do what he said he was doing, and I don't think that happened, and I think that has led us to why we're sitting here tonight in this long meeting. So, additionally, I'd like to go back to Dr. Marzak's description or excuse for the insurance. So, you told me, I mean, you just told us what you were told by Mr. Long, I believe. Was that a verbal conversation, or did he send you a letter?
Those were conversations between Mr. Long, Mr. Parliament, and also relayed to me.
So our employees received letters saying their insurance was not active or secure, and then this is all kind of smoothed over with a phone call? We don't have anything documenting that in a letter?
I'm not sure if there was any correspondence back and forth. All I know is that there was an immediate call made to American Fidelity to Scott Long, and then the situation was resolved and taken care of on their end. That's all that I know.
But I understood that they were calling them. So people received a letter, but then were told, oh, don't worry about it. I mean, I wouldn't take that. If I had a letter, there's no way someone could call and tell me everything's okay unless I got a letter in my hand. And employees did show letters to me that there was a problem. I never saw one saying everything's good. So that's just hard for me to believe.
Gotcha.
Karen, this is for you. I guess my question is you have employees doing certain jobs. Is there a check on what they're doing? Say I have an employee that just decides that they don't want to send in checks now. You know, that they want to keep all the checks over here in a little thing. Do we have a system that we would recognize that that's happening pretty quickly and take care of it?
Most of the tasks that individuals do are pieces of entire processes, so other people in the office have another piece of it. So it would be recognized that way, that, hey, I can't do my part because you haven't done your part, or there's something wrong with this, you know, or when are you going to do it so I can do mine?
So something would red flag it, is what you're telling me.
Yes,
Okay.
but if you're, you know, in a situation that was described where you've come in and you're not really, you aren't the person supervising that person, and then they leave, it is a fact-finding thing to see what they were doing, where they were in the process, you know, that kind of
Okay.
thing.
Thank you.
You said that currently you have a system where two people are being trained on similar jobs, where if at least one of them left, somebody could fill in
Yeah.
that position.
That's our goal. The
Okay.
only, oh, go ahead, sorry.
What kind of checks and balances do we have if both of those people leave? Let's say a new firm comes into town, they need some bookkeepers. They come by the school office and then meet two ladies at the restaurant, and both of them happen to be the same one that's paying the insurance payment.
Yeah.
What kind of procedures do we have to catch that, hey, the American Fidelity payment was not made for June, July, and August?
Well, because of the types of findings that we're looking at tonight, the way the office is going to be set up is that there are individuals that are working on specific things. They have a backup person, and then there's a person that supervises the group. So that person is sort of the person that's going to keep an eagle eye on overall, geez, it seems like we should have a bill, you know, we should be paying a bill now, where is it? That kind of thing. However, I will say that with the size of this district and the number of staff, we will be lucky to be able to have another person back up, you know, because it's just ongoing. There's not enough time in the day to do everything.
Yeah.
And I'm sure part of it is because we're still in a correction process. But the ultimate goal is to not have us left in the lurch. If two people left, that would be
Well, I mean, I guess
problematic.
what I did not hear is the supervision in the first part of your statements. You had two people co-trained, but you never mentioned anything about who supervised them. Okay, thank you.
Thanks.
Anything further? Mr. White, you tell me if you need to take a break or anything like that. But if not, we will try to press through these. And I know we've had a lot of questions for staff and whatnot. I'm going to ask that we in the interest of their time, try to make notes of those questions to ask staff. And let's just direct our questions simply to Mr. White and his team. So we don't want to take up too much of their time, and I apologize that we're already about 2 hours into this.
It's all right.
So the next one is 2017-007, cash on deposit.
Yes. Cash on deposit with the trustee was not reconciled properly in either the general purpose school fund or the school federal projects fund. You should reconcile your cash that you've recorded on your books back to the cash the trustee says he's holding for your fund on a monthly basis. That's sound accounting practice so that you know how much money you have. And that did not occur. Let's just read a little of it. The office attempted to reconcile the cash accounts with the trustees' reports. However, the following reconciling deficiencies were noted. The office did not reconcile the general ledger cash accounts with the county trustee reports in a timely manner. Instead, personnel waited extended periods of time to reconcile the cash accounts with the trustee. Auditors received the final reconciliation for the month of June 2017 on December 26th of 2017. The failure to currently reconcile cash accounts with the trustee reports allows errors to remain undiscovered and uncorrected. And in Part B, the office did not correct all of the identified errors and other reconciling items. Instead, these items were carried forward each month as part of the reconciliation of cash on deposit with the trustee. The failure to correct identified errors and other reconciling items allows cash with the trustee to be stated incorrectly on your balance sheet. And in Part C, auditors determined that these reconciliations contained numerous errors as well as unidentified amounts. Auditors used substantive test and alternative audit procedures to determine the correct year-end balances. In other words, the reconciliations, when we finally did get them, were faulty.
Thank you, Chair Parker. This is something that I guess it's always been a learning process for me, and maybe you can kind of help me to understand this. So, say I go down to Walmart and I buy something, I pay $1 in sales tax, and the county allocates a certain amount of that sales tax is going to be directed to the school system. I guess the state, they collect that sales tax, and then it goes up to the state, and then eventually sales tax comes back to Murray County.
Yes.
That dollar, my sales tax, does that go into an account at the trustee's office?
Yes, it does.
Okay. So when the trustee, when he receives that, my dollar, he's got some sort of books or something where he makes an entry that, hey, this revenue's come in $1 here.
Yes.
That's going to the account. So how do we as a school system, I know we spend money that's allocated or earmarked for our purposes, but it's in the trustee's account. How do we, as a school system, how's that communicated to us? Maybe staff can help me with that. Maybe you can help with that. How do we know that $1 went into the trustee's account that was allocated for the school system?
Each month, at the end of the month, when the trustee reconciles his own books, he then does a trustee's report, which shows you all of the revenues and the revenue codes that pertain to them and the amounts that went into each of your funds.
So
And
we
it
don't
sends you that.
actually like go behind the trustee and like audit his, or we don't. I mean, you
No,
all do,
we don't.
but we don't go back and like try to reconcile if they're saying there's $1 in sales tax. We don't like go and get their bank statements and then go and reconcile that. They basically send us like a communication or report, a trustee report that says, here's your $1.
That's
You got
correct.
that $1.
And then what we'd like to see is that when you receive that, then you're going to take your books, match it up to that. First, you're going to post what he's given you, and then you're going to see if your balance comes to the balance he says he has. And if not, the two of you are going to work the differences out together to determine where the problem is.
Okay, so basically you're kind of got two sets of books at the same time. The trustee, when he puts the $1 in the account, he puts it in his book, and then when they communicate that to us, it should correspond with whatever our ledger or our book is as well.
That's correct.
Okay.
I think the simplest way to look at it is just like your personal checkbook, the trustees like a bank, and the school books are like your check account records, and those have to be reconciled after that.
So with these not being reconciled in a timely fashion, I use that term loosely, because I believe every trustee and every school board finance office may not have the same time frame for getting it done. But therefore, they could not give us accurate figures on fund balance or any of our GP funds or anything without these being reconciled.
That's correct.
Okay, thank you.
All right, seeing no other, let's move on to the next one. Finding 008.
The office had weaknesses in posting financial transactions. And this is several different items grouped into one finding. In Part A, we observed several general journal entries in the General Purpose School and School Federal Projects Fund that were posted to correct or to reverse previous journal entries. Sound business practices would dictate that financial transactions should be accurately posted in accordance with generally accepted accounting principles. The significant number of general journal entries indicates weaknesses in internal controls related to recording financial transactions. In Part B, we noted that numerous revenues in the General Purpose School Fund were misclassified. We reclassified $301,772 from the miscellaneous refunds account to contributions and various other revenues, including state grants. Additionally, prior year receivables were not properly reduced by the related funds received in the current year. In Part C, some expenditures in the General Purpose School Fund were posted directly to fund equity accounts rather than to expenditure accounts, and other expenditures were reclassified to fund equity accounts by posting erroneous journal entries. These postings have the effect of understating your expenditures. In Part D, auditors noted federal grant revenue, $8,000, which was improperly netted against grant expenditures in the General Purpose School Fund. These postings have the effect of understating both the grant revenues and expenditures. Basically, it makes the transactions disappear off your books. In Part E, several expenditures were coded to accounts that did not reflect the true nature of the expenditures. Auditors noted payroll expenditures erroneously recorded in several non-payroll line items in the General Purpose School Fund, which included other contracted services, other supplies and materials, in-service staff development, other charges, and data processing equipment. Sound budgetary principles require expenditures to be coded to accounts that reflect the true nature of the expenditures. Misclassifying these expenditures diminishes the usefulness of the accounting records as a management tool. In Part F, auditors noted that the balance sheet accounts in the School Federal Projects Fund were not accounted for in subfunds. Subfunds are necessary to properly account for the individual federal grant programs. And in Part G, the school department maintains bank clearing accounts to facilitate the automated payment of various monthly payroll liabilities, such as your premiums for TCRS and employee insurances. These payments are posted, increasing expenditures and decreasing the related payroll liability accounts. The cash is deposited into the clearing account, and the vendor receives payment by bank draft, usually within 2 or 3 days. We noted deposits totaling $233,755 that had been made to these accounts at various times during the course of the year that were never withdrawn by the vendors. We can only conclude that these were errors. Additionally, that balance at year end was not set up on the balance sheet, and so we had to make journal entries to set that balance sheet account up. All right.
Actually, I do have one question. On this particular finding, we've got A through G.
Yes,
Could each of these have been their own separate finding if you'd wanted to?
they could have, yes.
So we have 11 findings, and we could add 1, 2, 3, 4, 5, 6 more to that?
That's fair, yes.
Okay, thank you. Ms. Powers?
I often look at things through a bird's eye view, but I kind of went through and just as things were misclassified, erroneous, deposit in error, like kind of the negative connotations, like I just circled them going through there, and it says here, sound business practices, it's a description, like this is not good business practice. And that is our responsibility as a board, to hold our county accountable to this. I just had to speak to this, so thank you for being patient.
009.
09. The office failed to comply with state statutes when entering into lease purchase agreements. During the year, you purchased 3,162 Lenovo laptop computers by means of 5 lease purchase agreements. You failed to solicit competitive bids for the purchase of these laptop computers. We were told that you were piggybacking off of a bid from another school system. However, there was no documentation to support that. We received the documentation from the other school system and determined that while you did purchase from the same vendor, you did not purchase in all cases the same models or pay the same prices as the original bid. In Part B, you entered into these 5 lease purchase agreements for the above-noted laptop computers, and they were not approved by the County Commission. Section 751-904 TCA requires that such contracts, leases, or lease purchase agreements be approved by resolution of the County Commission. And in Part C, you also did, because this is debt, you were required to file a report on debt obligation with the State Comptroller's Office. The county entered into these agreements between February 3rd of 2017 and June 6th of 2017. The statute requires that you would then report that within 45 days, and that had not been done as of the date of the audit, February 14th of 18.
Thank you. So I think we use the piggyback system to try and save cost as well as time, because putting stuff out for bid can be quite time-consuming and expensive. So when we piggyback off another bid, you're saying that we have to purchase the same exact model at the same exact cost of the bid that we're piggybacking on. We can't change anything about that bid in any shape, form, or fashion.
Other than possibly the quantity that you wish to purchase.
Okay, other than quantity. Okay, so if Lincoln County, just throwing that out there, Lincoln County bought computers, they did not have, include the case, let's just say a computer case, and it added $4.50 to the cost of each of the computers. We would have had to have rebid that completely if we wanted to add the case.
Well, I think so, yes.
Okay.
What we found was that you actually purchased models other than the models that had previously been bid and that bid accepted. So when the other county did their bid, it was competitively bid and it was awarded to Lenovo for a specific computer at a specific price. That's what you're allowed to buy by piggybacking.
Okay.
You can't just then say, okay, it's Lenovo, we're going to shop around. You can't do that.
So any changes, we have to do our own bid?
Yes.
Okay. And had all these procedures been, does all the school purchasing departments, are they aware of that? Because what I'm saying, we've been piggybacking bids, I know for 6, 7, 8 years, and we've never had any problems.
In other instances, you've done them properly. Yeah.
Okay. All right, thank you.
I sent email, yes, you, Mr. Carver, about the deviation in price of what we approved in this last board meeting and just paid $226. Is that a piggyback contract?
program that, the program that we're going to be utilizing is one through the Department of Education for this, for the state of Tennessee. It is a rental program, which is very similar to a lease, except it is a, and I'm going to follow up with some conversations with these gentlemen, but it is a device that has been vetted by the Department of Education in the state of Tennessee. It is a different financial tool that we're using with this second wave than was done with the first wave.
But it's the same computer,
Oh, no, yes, ma'am, it's the 11E.
costing $150 per computer less. Okay, so that's good, that's a good thing.
Well, and again, I don't have the,
Whatever.
yeah, I don't have the
was
cost of the cost of the device that we are renting, and I know Tommy's back here, I don't want to put him on the spot, and Dave's sitting here, but the cost of the device that we are renting is, I want to say $740 for the device, and it's an 11E Lenovo laptop computer. The bags are not a part of that, and we will have to do those separate. And it's my understanding that the cost of that is similar to the cost of the ones that were leased on the first round.
What, $226 is what you asked us to approve per laptop, $299,000. But they were $379. Let's address the audit. You know,
We can get back to that later.
Yeah.
Make a note.
So when you sought a better price here, and that's great. But are we going to be compliant with audit findings? That's what I sent to you. Yeah.
If you go back to the one I sent you.
Oh, it's up here.
Well, and I think Mr. Carver's gonna take advantage of the fact that some of these auditors are here and make sure that we're in compliance.
That's what he's
Yeah.
saying. You're going to make sure we're compliant and
Correct.
and everything. It blows my mind that we spent $150 per computer more than we would have had to. We appreciate that you've done that.
Here, right there.
Yeah.
It's a state contract this time
Yikes.
as opposed to a lease.
There's the cost, it's
Okay.
$733. It's not, all this other stuff down here is just the add-on stuff. But the diploma cost is $733. It's the same as
I
the
just need to
first round.
clarify that I understand TCA
Okay. but
correctly. Like, that's
you,
kind of like a law,
what-
right?
I'm sorry?
what we
TCA is
approved
kind of,
was-
That's
it's
the
a
law.
legal term, it's kind of
Yeah.
like a law.
Yes, it is.
So we didn't comply with the law.
No, you did not.
Okay. And here it's talking about an
this many
agreement.
computers.
And typically, an agreement is signed, right?
That's correct.
Would that be signed by our superintendent? Or who else would sign an agreement?
Okay, all right. It's
Well,
okay. It's okay.
it should have been assigned by your chair of your
Okay.
school board and your director of schools.
That's your communique, that's not mine, so I don't know.
I understand.
is-
That's what. I
and is-
understand. Thank you.
Board chair, you typically yield to the recommendations of the superintendent, correct? That it's been properly vetted and,
I'll just say on that particular one, I wouldn't have signed it because I wasn't chairman at the time for
I know,
that.
but
I would
typically-
say typically when I'm asked to sign a contract, I always check, make sure that it's something that we've approved at our board meeting, but then I also check with legal counsel that he's approved it and that it is ready for my signature, is my standard operating procedure. Because I don't want to sign anything that we haven't approved and that he hasn't approved as our legal counsel.
Madam Chair,
Yes.
Part B is on me, and I take full responsibility. Mr. Breeden asked me if that particular lease agreement needed to be vetted or needed to be approved by the county commission, and my opinion was no. I respectfully disagree with Mr. White's assessment. I don't think that statute applies, but I understand the situation, and we will do it differently going forward, but that's 100% on me, Part B.
well, I am aware that in our superintendent's contract, it does say that he will comply with all, current TCA. So I just wanted to speak to that. Thank you.
Yeah, I had a question. So if we do some sort of rental agreement, does that have to get competitively bid versus a lease, or
Let me speak to that. The agreement that, I'm sorry, I don't know that man's name.
Yeah.
Yes, that he was discussing. In the current year, the Department of Education has done an RFP for these computers, and they have awarded a bid to Lenovo. And so you can now purchase, in this instance, I say purchase, you say lease. We'll get to that in a minute. But you can get your computers from Lenovo without further competitive bidding.
So it's like piggybacking on the
Off the
state's
Very
contract.
similar, yes, it is. Now,
But it would, a similar circumstance, we'd have to stick with exactly what, I guess, the state had entered into a contract with on, and I'm putting you on the spot, you're probably not familiar with all the
I'm not sure I can
details of the
speak to it, but
contract.
as I understand it, there are more than one model that's available
Okay.
at set prices that you can get from Lenovo.
Okay.
There's a separate issue here besides the competitive bidding, though, and that's the fact that the lease itself needed to be capitalized. Accounting standards require you to capitalize any lease in which the terms of the lease would exceed or meet the useful life of the product. This was a 3-year capital lease. And a capital lease then becomes debt, and debt has to be approved by your county commission. And then these debt reports have to be filed. So two issues.
And if I could speak to just that, now on these leases that have been approved, the county is asking you to sign an MOU that says that the county's not going to be responsible for the payments. And as I understand it from the county attorney, you are going to pay the county to then let the county make your lease payments. So, again, I think we're getting this, trying to get in compliance with what the auditors are asking to be done. It seems a little convoluted to me, but we're working diligently to try to get it fixed and try to get the way they want to see it.
Okay, just out of fairness, I mean, I know we're not the only one in this boat, but school systems are trying to get computers in the hands of the students as quickly as we can. How many other systems had similar findings over the procedures not being followed
No.
word for word?
And this year, none.
So we were the
Mr.
only.
Bailey had that listing earlier. I believe there were 15 school findings in total in the state, in the mid-state of the 21 counties that we audit, and 11 of them were here. The other 4 findings, no, none of them were material like this.
So we're the only one that had that misinterpretation of the law.
Yes.
In fairness, Mr. White, how many other lease purchase agreements did you review? How many other districts have lease purchase?
I have no idea.
It's also possible that we had that finding in another area of the state. I can't recall specifically because I was county report, I can't remember them all, but, it's possible that another county did that somewhere in outside of this.
I'm going to speak as well. When we see lease purchase, capitalized lease of this dollar figure, we look at all of those in any system.
So you're gonna pay this more attention than you do a $4,000 copier for one copier?
Correct. Yep.
Okay.
All right, seeing no other lights, I think we can move on to finding 2017-10. I think this was one that y'all maybe had found in some other counties too. We were not alone in this one.
That's correct, yes. So, I believe it was some counties outside of the mid-state, but yes, within Tennessee. The school department had some deficiencies in a contract for commercial driver's license testing. While performing our interim audit procedures for the school department, it came to our attention that the department was party to a contract with the Tennessee Department of Safety and Homeland Security to provide commercial driver's license third-party testing. Under the terms of the contract, the school department is to perform skills testing for CDL license applicants, with testing to be performed by a certified examiner. Applicants are to be charged no more than $75 for the administration of this three-part test. The school department designated 2 of their transportation department employees as these certified examiners. The current contract with the Department of Safety and Homeland Security is for the period from May 6, 2014 through May 5, 2019. Discussions with management and other procedures resulted in the following deficiencies. In Part A, auditors reviewed the official minutes of the Board of Education and found no evidence that the contract had been approved. Additionally, the current contract was signed by the Transportation Director, not by the Board's Executive Committee. Once again, that's the Chair of the Commission and the Director of Schools. And then Tennessee Code 492206 states that it is the duty of the Executive Committee, the Chair of the Board of Education and Director of Schools to sign these contracts once they're authorized by the Board of Education. In Part B, the school department didn't document whether the fees collected were to be remitted to the county as county revenue or retained by the examiners as personal compensation for providing the training. In addition, no known receipt books were maintained by the examiners to document the amount of fees collected. Fees received by the examiners to administer the test were not remitted to the county, but were retained by the examiners. Auditors were unable to obtain reliable information to determine the amount of fees that had been retained by the examiners. And in Part C, the fees retained by the examiners were not paid through the school department's payroll system and were in addition to their regular salaries. Since these supplemental payments were not paid through the department's payroll system, these payments were not subjected to income tax, Social Security, and Medicare deductions. Also, the department did not report and pay its required matching portions of Social Security and Medicare associated with these fee payments. And this compensation was not reported to the federal government on Form 1099 or W-2.
This isn't a question, but the next line, these deficiencies exist because of a lack of management oversight which weakens internal controls.
That's correct.
Thank you.
Moving on to the next one. Number
The
11.
department,
2017-11.
yes. The department had deficiencies in the maintenance of capital asset records. In prior years, your school department maintained its capital asset records in a computerized spreadsheet rather than using a computer software application. During the current year, the school department attempted to transition these records into a computer software application. However, the capital asset records presented to the auditors failed to distinguish between prior year assets and new additions and failed to classify assets by function. Auditors advised the school's finance director of these deficiencies and requested the capital asset records be corrected. The school department subsequently provided revised capital asset records in an altered spreadsheet format, which did not clearly distinguish between the prior year assets, the current additions, and the asset disposals. Auditors revised the format of these records to a usable format. Additionally, the capital asset records contained the following deficiencies. The school department failed to capitalize the completed construction of energy efficient upgrades for $9,724,174, as well as an HVAC unit at EA Cox Middle School for another $34,399. The accumulated cost of these projects had previously been accounted for as construction in progress. Auditors proposed an adjustment that reclassified these from construction in progress to buildings and improvements. In other words, we gave you an adjustment to fix it. The school department failed to capitalize the Lenovo computers we discussed earlier. Because it's a capitalized lease, it's treated as debt and a purchase, and the laptops should have been capitalized and put on your capital asset records. We did that, recommended an adjustment for that as well to correct that for another $2,665,289. We presented these adjustments to the school officials. They approved them and recorded them on their capital asset records.
Madam Chair.
Yes.
Just for my benefit, Mr. White, if the district had capitalized those lease computers, but had no intent of purchasing the computers at the end of the term of the lease, is there a process in accounting to uncapitalize or to remove an asset from the capital ledger? Because if we were showing those leases for 3 years and then they got turned in at the end of the lease,
Then you write them off your capital assets.
you write them off at that
Yes.
point. But someone from the outside looking in would see those as assets of the district, when in reality, they were just leased assets that at the end of the term would go back to the manufacturer?
According to the accounting standards, they were assets of the county, or of the school department.
Okay, the Murray County standards.
The accounting standards of the United States, yeah.
Okay, so that's because it was treated as a capital lease, they needed to be shown as capital assets, even though the district wasn't going to keep them beyond the term of the 3 years.
That's correct.
Okay, thank you.
Anything further on this one? All right, moving on.
Okay,
Last but not least.
last one. Accrued leave records were not maintained adequately. The school department's personnel policy permits employees to accumulate earned but unused vacation and sick leave. School department personnel provided auditors with accrued leave records, which we tested for accuracy. We tested a sample of individual accounts, and we noted numerous deficiencies in these records. Beginning leave balances were not in agreement with prior year ending balances. Employees who had retired, resigned, or whose employment had been terminated in the current year had not been removed from the records. And earned and used amounts for individually tested employees did not agree with their subsidiary payroll records. We ultimately used alternative methods to determine accrued leave balances. The failure to maintain adequate documentation of accrued leave balances weakens internal controls over the payroll process and increases the risk of improper payments and inaccurate financial statement presentation of accrued leave balances. These deficiencies can be attributed in part to ineffective management oversight, a lack of technical skills to maintain the accounting records in accordance with generally accepted accounting principles, the failure to correct the prior year's audit finding, and management's failure to implement their corrective action plan. It was, after all, a repeat finding from the prior year.
I just ditto over everything I said about these accrued days. And the fact that it was a finding from a year ago and we didn't get it audited and corrected and it's now a finding again, I mean, I just think that is really, for our employees to have to deal with this and not know where this is and all. And I think it is a management problem, and thank you for addressing it to us, but I think it should have been corrected a long time ago.
I want to respond to that. This is a spreadsheet. It's an internal record. It's not necessarily used. We did use it when we went through to audit the days that are in SearchSoft. But the days that are in the system, when I think it come over wrong from Zortec. A lot of this was something that it just kind of fell in our lap, and we have this year took this over, went through each and every one. Tiffany has met with both auditors on this. She now understands why we're doing this, the reasoning behind it, and I think she's got a really good grasp on how to keep those records. We were told to keep the retirees on these records. We were told to keep the people that we left on these records, and then we got an audit finding saying that we weren't supposed to have those people on the records. So we went through a training process for this. Again, there was no training, but Tiffany has made an effort last week or 2 weeks ago to meet with the auditors to find out exactly what needs to be on this report, who needs to be on it, who doesn't need to be on it, and how to make sure it's correct from here forward.
Any other questions for Mr. White? Mr. Bates?
Just some general questions, like on the audit itself. And again, I guess the purpose of the audit is to be able to see our financial picture. And I had some questions about that, the bottom lines on things. I was looking at Exhibit J8, it's page 167 of your audit, and I bet you don't have
Don't
the
have it
full
in front of
report.
me.
All right, so I'm just gonna try to help you, walk through some of these things. So there's a section on there that, is local tax revenue. And this is something we struggle with, every year, and this is appropriate because we're coming up on budget season, and so we're trying to set a budget based upon what we anticipate the revenue is gonna be. And then, of course, our county, they naturally want to be conservative and try to, they don't want to increase that budget too much. But I just wanted to ask you a little bit. So I'm looking at, for local revenue, as of the close of the books on July 1st, 2016, looks like our final budget for local revenue was $35.9 million, okay? But and that's what we budgeted in local revenue. But what actually came in, as reflected by this audit, is $38.7 million. So actually, your report on 167 shows that I guess that we under budgeted that revenue by $2.8 million.
Sounds like it, yes.
Okay. And normally what happens, I guess, is if we budget down here, but the actual revenue that goes into the account is up here, that money at the end of the fiscal year, that's what rolls into fund balance.
Yes,
Assuming you kept your expenditures stagnant and all that.
yes.
So that would roll into fund balance. So as reflected in this audit report, big picture reflects that $2.8 million would have become available to the school system for use for miscellaneous purposes, buying computers, buying more art supplies, all those things. But if for the 17, this is for 16-17, but for the 17-18 fiscal year, if the county removed around $2.2 million on that actual revenue, if they removed pennies, then that would not necessarily leave a lot amount of money in fund balance, would it?
Difficult for me to answer that question. Obviously, if you remove pennies, you're going to have less fund balance, yes.
Okay. So we're seeing this report at the close of the fiscal year for June 30th, 2017. Really, the financial situation of the school system looked pretty good. Around $2.8 million in excess to be able to go towards air conditioners, to be able to go towards computers. I know we want to try to go ahead and kickstart that to expand the computers. But talking about management, talking about the management of this school board, as a reminder, this board agreed for the county to remove a certain number of pennies, and that actual revenue has been reduced by approximately $2.2 million. And so hopefully the actual revenue increased substantially, and it's going to be enough that maybe that fund balance figure will be very healthy like it was before. But that's something that we are getting into budget season, and it is very helpful that we have this information in front of us to know that that might not be available this year because of the decision that the board made. And that's real. That's bottom line. So, and that's not just going to be an effect for this particular board for this year in the budget, but it's going to be a issue that the board is going to have to grapple with for years and years to come. Now, it may be that when we get into budget discussions, we may be able to persuade the county to reallocate funding for us. I have serious doubts about that because we have so many needs that are on our capital right now that we can't even get all the needs of the county or of our school system funded in just the bare minimum request that we've made thus far. And so if they are grappling and their pennies are very tight, that they can't even provide debt service to provide our capital needs, what do you all think they're going to do on our operating? At least last year we had a basis to argue with them that, hey, you all are budgeting 35.9. I've got a pretty good argument that the actual revenue is going to be 38.7. And we have that evidence right here, that it was under budgeted. And what we said was true. What we repeatedly, till we were blue in the face, to try to explain to them that no, the sales tax revenue is going to be higher. No, the property tax is going to be higher. But then we get into this battle over maintenance of effort and that big voodoo of maintenance of effort. And because of that, we can't increase that budget on local revenue. So hopefully, maybe there'll be some extra revenue that comes on the state, but I think this is very appropriate that we need to start really chewing on these things because we're about to enter into budget season. We've got to put together a budget. So we've got to start studying these bottom line sheets on what the revenue is and what is going to be available in fund balance. So I hope we do start having those discussions here pretty quick.
I think that's a very good reminder for us, Mr. Bates. I will note that we also said that we were only gonna spend 91,000, and we spent 98,000. So we actually ended up in the red last year. So we weren't able to put money into fund balances last year because it looks like, based on the material deficiencies that were in our financial statements throughout the year, we really had no idea what we were spending. So we're going to have a hard time making that argument too for the commission, I think, going forward. And actually, that was one thing I did want to ask you about, because your final recommendation is that the county move towards the 81 Act.
Yes, I think Brian might want to speak with that.
This is a recommendation of some sort of centralization that we recommend in every county. Based on our experience over the years, we think it's a very efficient system, and it will alleviate some duplication of effort between all departments. And so we do recommend a centralized system of accounting, budgeting, and purchasing. Now, with that said, I've spoken to a lot of school boards and commissions about this over the years, and a lot of joint sessions when we have both bodies together. And there's a lot of fear on both sides. It's going to cost more money. We're going to lose control of the schools. But that's not the case. Title 49 is very clear that the school board is in charge of operating the schools, and that the director of schools and chairman of the board have certain responsibilities overseeing the day-to-day operations. So you'd still be doing your purchasing. You'd still be doing your budgeting. All it would really change is that the accounting department would be processing the payroll, making your purchasing payments. So, as I said, we do recommend that. That's a local decision. We've seen it work well in a lot of counties. And it comes down to personnel you hire to run it, to be honest. We've seen it fail because the resources and the right people weren't in place. So it's no secret that we've made that recommendation. We make it in every county that does not have a central system. Okay.
I was going to ask about that. So do you still continue the process of where you basically have two duplicate books? I mean, like with the trustee has their cash ledger, and then we do that, or would that not just be all in one house?
The accounting system will be there. In other words, the only difference is you'll get monthly report, but it will be generated by the centralized finance department that keeps the records for all county departments.
So when we get like monthly financial statements, would that agency or the county, we would just see one financial report from them, or we would still have our own internal?
You'd still have your own. The records would still be for your department, for general purpose school fund, for instance, but they would be generated by the accounting department that's centralized.
So I was trying to make your job easier. We'd have to audit two different things. So, but it sounds like you probably would still go through that process. We would still have our own financial reports, and you all.
You get your financial reports. You're just getting it from a different source. And to clarify something else, it's not like all your financial personnel would be transferred over. Some would, like if you got a payroll clerk, they'd probably work for the finance department. running the school department's payroll. But there's normally, and the ones that have worked well, in my opinion, there's a financial person that stays on to help with school budgeting, because someone has to compile and prepare the budget for the board to approve before it goes to commission. There's also a lot of reports that go to State Department of Education that they can help prepare.
Okay, all right, thank you.
So they'd have to, if you had a finance person that stayed at the school department answering to the director of schools, they would have to work closely with the central accounting office, because that's where the financial records would be.
How many, and I know you don't have a number, but let's say percentage-wise, how many school systems and county government use the 81 Act? 50%?
Well, we've probably got about 40% statewide that have some form of, 81 Act's not the only act. There's private acts. You know, there's like metropolitan form of government would be a centralized system. Like Knox County, their schools are centralized.
Is it generally the bigger school systems that do this?
No, ma'am.
Okay.
We've got some real small ones that are very successful at it. We've got large ones that are. So it's all over the board.
I had actually today a county commissioner say to me that they had implemented this because of their distrust in the management of the schools. So the financial management of the schools. So I personally hope I think we're getting our act together, and hopefully the commission will see that. While I have the mic, though, I want to thank you all for coming. I'm not saying we're over here. I just want an opportunity to tell you how much I appreciate how patient you've been, especially because I know it's evident to you our frustration, and obviously that now we've won this championship of having the most. It's not something you want to win, or you know, I feel like it's a loss, really. But I do appreciate that you all have endured and persevered, and that you are here to help us through this.
Well, you're quite welcome, and we'll help in any way we can. Comptroller's motto is to make government work better, and we truly want to do that. Now, with that said, you can't fix a whole lot of the things in the past, so, you know, really going forward is what you have to fix. So, you know, however you see fit to do that, with centralization or not, or just improving things, you know, we'll help in any way we can. Call on us whenever we can help. Thank you.
And as a really quick follow-up to that, what I've told all department heads is between now and June 30th, each one of them are to meet with the auditors individually twice to address every single individual audit finding to make sure we're doing it correctly from here on out. Not only that, they have to account to that for me on a spreadsheet. And so far, Mr. Breeden has pulled them in 3 times, and then Dr. Alexander has pulled them in to work with Tiffany on the accrued leave reports. So the expectation is there. We know what needs to be fixed. We know what needs to be worked on. We know the date that it's due, and we're pulling in the auditors to do that work. So it is happening.
Thank you. Just a real quick shout out to the Comptroller's office. I don't know if you all have ever perused their website, but you all have an office. It's like educational accountability or something, a division, and they do outstanding reports. I mean, they are the best reports I think I've ever seen. I mean, it's very easy. I mean, I'm always looking for user-friendly stuff. So you all, if you ever have a chance, go to their website and check it out. It's some really great reports. Thank you all for doing that.
Thank you very much, Mr. White. Sorry, we did not provide you with the chair, just water.
That's
But
all
you were a
right.
trooper. We'll go ahead and take a break and then reconvene to allow board members to ask staff questions relating to the findings when we kind of stop doing that. Thanks. I have to have quorum for a work session. Based on my notes where we stopped doing questions to staff, we're letter F, finding 2017-007, which is in regards to cash on deposit with the trustee. Does anybody have any questions for staff on that one? We're talking about that one. Letter F on my sheet that I provided y'all with, or finding 2017-007. Mr. Dudley?
Well, I guess my biggest question, we're into our budget process, and we had to rely on the figures that we're given about account balances and everything. And I just want to know, can we rely on the figures that we're given about any of our balances and everything without having to have a degree of doubt as to the accuracy of them. I mean, this whole process depends on us being able to base our decisions on what we're told.
The audit adjustments that were presented to us from the auditors were just entered in this month's financials. So the report that you get from me monthly, that will show the fund balance estimate, that will show the cash flow, that whole thing's going to be altered because the taxes received were not part of what I started that whole model with, because I did the report out of Skyward, and obviously the adjustment wasn't in Skyward yet. So that, and I'm working through those numbers now and trying to lay that out and explain that to you, where we are. As far as the budget itself, and we're starting with FY18 with revenues and expenditures, we have entered the revenues we've received, and we are tracking the expenditures. So unless something has been miscoded that I'm not aware of, or something that we haven't found as an issue that has not been corrected, we're using FY18 as the basis. Going forward in FY19, the salaries and benefits are a huge part of the budget, like 85% in some cases. So it's all dependent upon the information we got to populate those account numbers, if that's correct. And the rest of it we are working through, everything that's not a salary and benefit. We are looking at what we budgeted for this year, how much we spent, what initiatives are being added, what initiatives are being taken away, or what's going to be recommended. So we're in the process of working through that. Does that answer your question?
So it sounds like you still have some doubts as to the accuracy of what some of the figures you're going to give us will be.
The figures that I've produced, I can stand behind, but if I'm getting them from somewhere else, I can't guarantee. So I'm used to a different system. I'm used to our actual data in Skyward to be put into another module of Skyward, which is called salary negotiations, and it takes every single person, and you make sure that every account number has the right people in it for the right amounts. You know, there's a bunch of cleanup, like, you know, this person came late, so their salary is only showing partial year, but we need to put the whole year in, or we have a vacancy, like all those kinds of things happen in HR. And then when that's completed and checked, everybody's given a step in the system, and then those two reports in the past have been given to me, and then I take that information from there and go and start to do all my what ifs in the budget. So that's what I'm used to.
Okay, you mentioned another module. How many modules of Skyward are we not using?
I contacted Skyward, and you do have the module of salary negotiations, which is the one I was speaking of. I actually asked about it in my interview too, because it's such a huge part of the budget process. And you do have the module, but it's not been activated or used.
But
So
it's
you
not-
don't have to pay extra for it, is what I'm trying to say. You
So I was
have
about
it.
to say, it's a part of the program
That you
we're paying
purchased.
for, that we just, out of the blue, said, no, we don't want to use that.
Right, I don't,
Never had training on that module. So much training was given from Skyward into Payroll. A lot of those hours were used up, and so we never, once we used up the hours, instead of paying for extra, we just held on salary negotiations. And Karen's the first one that, really brought it in and said, hey, this will be great to use next year for budgeting and that sort of thing. So it's gonna be a good tool for us, but we've never had the training. We've just gotta wait on that.
Are there other modules, Skyward, that we're not using or not making the most of?
have to check your actual purchase, what modules were included in your whole purchase. I had just specifically called them about salary negotiations, and got the answer on that. And, so, we can look, but the timekeeping thing we talked about earlier is a good module. It does take some work to implement it and to maintain it. So, it is something that will take a commitment from the district to make it run successfully. But I can check for you and see what your actual purchase included.
Dr. Marzak, do you know of any reason why we shouldn't be using Skyward to its fullest extent?
Wanted to wait until we got a CFO that was experienced with Skyward. So we're lucky that we have Ms. Gagliano. She can direct us here forward because she's been working with Skyward for since 2000, so almost a decade. So now that we have somebody experienced with it, that knows the ins and the outs, knows how it's supposed to be set up, knows how it's supposed to be used and how it's not supposed to be used, now we can operate different moving forward.
Okay, can you give the reporter a report of any of the Skyward offerings that we have elected not to use?
We can
forward?
work together and come up with that, yes.
Okay. So, like I say, I think you've still got some concerns about the accuracy of some of the figures that we're going to have. I mean, is the end of this fiscal year, can we pretty much say that from July 1 that all figures are going to be accurate as far as account balances and everything?
From July 1, the coming
This
July?
coming year. I mean,
Yes. Yeah, that's the new year of FY19. That's what that's where we'll be able to start over.
Okay.
But I will qualify from what I said before, as we're building this budget.
Well, I know we have possibly looked at using fund balance for some computer purchases and now changing some of our one-on-one program.
For FY19?
Yes.
In our early discussions, we are still, the way we started it is I prepared the revenues, and so we know where we're kind of starting from. And then, of course, some of the revenues, we don't have the answers yet. We're waiting for the value of the penny. We're waiting from the first estimate for BEP, so on and so forth. So we've been conservative in that. And then we have, each of the departments heads and the schools have put together their request on the expenditure side. So we totaled all that up to see where it's at, and we looked at the gap of revenue and expenditure. So now we're doing the what ifs of working, backwards through that. The ringer is what I just mentioned a few minutes ago, where the audit adjustments from last year are now going to hit this March financial report. So before that, I might have had a different opinion on how much you could use out of fund balance for one-time things. I want to wait until I work through that, so before I can give you an answer on that. But I don't think it's going to be a really viable option unless something really changes in revenue. Unless, we have an instance where, like Mr. Bates was talking about, where we estimated X amount in revenue and 2.8 million came in more, but you don't know that till the end of the year. So my recommendation would be, if we are uncertain about it, to sit wait a year, let that come in, see what it is, and then budget it the next year with purpose from fund balance for your one-time expenditures, your one-time commitments, and go that way. Or if you want to do a budget amendment in the middle of the year, which I don't really like, but if you have to do it, we can do it, to plan to use fund balance for the budget.
I know, I think it was month before last, I heard in one of your reports, you said you thought we had somewhere around 13 million in fund balance. Is that still close to accurate, or is that completely to be?
That's what we're having, like, as we're going through these months for cash flow, but when we get to the end, it's more like, you know, the 2.8 million is your 3% that you have to hold in reserve, and then we'll have probably another 2.8 million on top of that, hopefully. But I have to see how this audit adjustment works into it, because it reduced our revenues for this year, but then it was put into fund balance. So I have to kind of redo everything to see where we stand. So we didn't lose any money, it's just where it's accounted for. But I'm always going to push you to follow best business practices, where you should carry an 8 to 10% fund balance, and with what I was just describing with the 3%, and then the additional, you'll be like at 5%. So you've made a little progress, but I would like to keep some in reserve. And at some point, I would like to correct your payroll issue that we talked about, where instructional individuals have that July payment that's recorded in June, and it just messes up benefit administration and a lot of different things. But we have to have the cash to be able to do that.
Well, I mean, that's where, in my opinion, the board is waiting for you and Dr. Marzak to make those recommendations.
Yes,
I mean,
that will come with the budget development.
Okay, thank you.
Yes.
Ms. Gagliano, you mentioned the salary negotiation Skyward module that you talked about during the interview process. Were you told that we had it and that we were using it during that interview process?
I remember asking the question, what is the role of HR in the budget development process with regards to Skyward, and because it's a huge process. And from what I recall, it was like, yes, we use that, and I might have not said salary negotiations, but I said Skyward. And yes, we use that, and I'm familiar with that, because the HR person in Oak Ridge had a huge role in developing that base. And so when she would hand it over to me, I would be confident that every person was accounted for, they were in the right slot at the right amount, and then we would take it from there.
And salary negotiations, that word was not mentioned, but we did use Skyward last year, part as a budgeting tool. We were running reports and that sort of thing, doing it more through reports and spreadsheets instead of actually using that module. So we've had it, we're just not using it, we're just waiting on training.
So, Ms. Alexander, could you, I know Ms. Gagliano brought us a request for additional training for her staff. Can you bring us a request for additional training if that's something that you feel like would be valuable to your staff?
We will. That will be done at a later date, though, because it will, the best way to do it, and I'm thinking Oak Ridge, Dr. Lee does it in maybe February. That way it's fresh on their mind, and actually I think each year she has them come in and do kind of a refresher course on it, because it is something you just use once a year. But that's closer to budget time, and so that's why. So our
you're
time
like
will
2 months
probably be,
behind is what you're telling us.
well, yeah, I'm not so sure if it would even be valuable to do it this year, but definitely for next year. And I'm wanting to do it around December. That's when we're a little slower in HR and that sort of thing. So definitely for next year, we're going to put that in the budget.
We had, Amanda and I had spoke about that today, and I had recommended that she kind of reserve 3 days, and I told her usually HR in Oak Ridge did it in February, but it just depended on our budget schedule, and that, it is a once-a-year thing, and it's quite complicated, so oftentimes people have them come back each year and just walk me through it kind of thing. So we did talk about that today for the future, for the FY20 budget.
And Dr. Marzak, going back to Skyward, because it really just kind of seems like it's the root of a lot of our problems. Although I hate to blame it on anything in particular, but I know you mentioned just now that we weren't fully utilizing it because we didn't have somebody that was trained in Skyward that could implement all these various modules. Like Ms. Gagliano has that training. But at the time that you made the recommendation to us, you didn't have anybody on staff that was familiar with Skyward other than yourself, did you?
Correct.
So did you think to build that in to the type of training that was needed? Did you ever see the training schedule? Like, where did this all fall apart, I guess is where I'm coming at.
So we've kind of talked about that a little bit internally, and it goes back to when we first implemented Skyward, and some of the training was not taken advantage of by some of the employees. We offered multiple trainings at multiple times. I've seen, my experience with Skyward was all the front-facing, so approving purchase orders, approving time off, implementing my own time off. I didn't have experience in Oak Ridge with the backdoor process, with building budgets, with running reports and stuff like that. That wasn't my job. So that's why the conversation was talking about professional development to make sure staff has what they need and they're implementing what they need to move forward. So that was pretty much my experience with it, was front-facing.
Well, going forward, I think that if you're going to make a recommendation on something like this, I think it's important for you to maybe, in the interest of transparency, give us some full disclosure about what exactly your background with it is, because at that point, we were just relying upon your knowledge, and you can approve a purchase order on your mobile phone, and I remember that.
Yes.
And that stood out to me, and you indicated that that would be a time saver, and we would not have a lot of these issues, and we have had a host of issues. And, I mean, when I go back and I look at this, we're talking about 18 months of problems.
Mm-hmm.
And I'm glad that department heads are meeting with auditors. I don't know why 11 findings prompted that, but 5 findings didn't, especially when most of the other ones were material as well. So I'm very curious as to why now we want to talk to the auditors when we didn't want to do it last year.
We had conversations with the auditors. They were a part of the process. As you can see through some of the audit findings, there were specific reports that they asked for and things that they asked for that apparently we didn't get them in a timely fashion, or we didn't get it and it was materially correct. So what we want to make sure is moving from here on out that it is timely, it is materially correct, and it is the way that it needs to be.
So what assurances do we have as a board that you, as the head person, that when the auditors ask for a report, they're going to get it. They're going to get it in a timely manner, and it's going to be pretty much correct.
Mm-hmm.
I mean, that first finding that we had basically said they never got anything, or at least what they got, they didn't get the right stuff.
Yes.
So going forward, what kind of assurances do we have that you're going to make sure that all your department heads get them the information that they need in order to, give us an accurate audit so that we can rely upon what they're telling us?
Yeah, every single one of these audit findings have basically moved to the front of the line. So there is no ifs, ands, or buts. It has to be done. We don't have a choice. We cannot get a repeat audit finding on any of these 11 moving forward. And so that's the beneficial part of getting the right people in the right seats moving forward in the same place. That's why we have Ms. Gagliano for CFO. She knows everything that needs to be done inside this report. She also has to have the people in her department. They know what needs to be done, such as Ms. Cook. She, as a senior business advisor, she knows what needs to be done, and the auditors are there to help us move forward. Multiple conversations with Dr. Woodard on what he needs to do, where his budgets need to be built, the kind of conversations he needs to have. Same thing with Mr. Breeden, and same thing with Ms. Alexander. So making sure that what was found is corrected, because going exactly to what the last auditor said, we can't fix anything in the past, but we can fix things from here moving forward. And the more we pull the auditors in, and the more we have conversations with them, and the more we're on the same page with regards to communication, these things don't happen again. And so that's the idea.
Well, for this particular finding that we were talking about on the trustee, it seemed like they felt like you guys, and I'm saying you guys, and I know it was not you, Ms. Gagliano. I know that you, I'm sure, know how to do this process. But it sounds like VACO did not know what they were doing with regards to the trustee account. They did not know how to reconcile it. The auditors came in and took control over it, and they were doing it, and then they had to stop doing that, was what your response essentially said and what their response essentially said.
Yes.
So going forward, do we have the right people in place to be able to do this without putting the auditors into a situation where they have a conflict of interest essentially?
We're working on staffing the office so that we will have the right people in the right positions, and it's still, with the size of this district, it's a challenge to be able to have the time to do all of these things. I mean, but this is like our playing field here. You know, we're not going to repeat these, so we're going to do whatever we have to do to not repeat them. Is there something else they're going to find that we're not aware of? You know, we'll have to take that as it comes. But yeah, our goal is to not repeat any of these. And as far as the help from the auditors, I would need, there are a few things that are different in a county than a city school district, so I'm going to be looking to them to say, I've never done this before, can you show me the right way to do this, or how do you want this kind of thing. So, you know, if I don't know, I'll ask them.
Thank you. Mr. Dudley.
Dr. Marzak, I think I keep hearing you say that our efforts, we're not going to have the same 11 audit findings next year. That those 11 are going to be gone. But we're not going to see another 22 different ones, are we? I mean, I don't want us concentrating so much on these 11 that we just completely forget about everything else.
Yeah, and that's a good point. So that's the idea of hiring a chief financial officer with Tennessee school-based accounting experience and financial experience, was to make sure the financial office is head up by somebody that knows what needs to be done according to Tennessee internal accounting audit, internal accounting procedures. The other things on here, for example, Mr. Breeden and Mr. Rolliver, with regards to the new lease that went down, they got the input, the advice from the auditors, and they adjusted to make sure that they did it and they implemented it in the way they're pushing it through according to what the auditors are saying. Same thing with the CDL license. You know, Mr. Breeden said, you know, this is the way we did it according to Homeland Security. It's the way they told us to do it. But if the auditors want it done this way, then we're going to do it differently. And it's already being done differently. So that cash is going to be received through the school system and then paid out through the payroll system. So I believe that the department heads know what needs to be done, and they're going to make sure that things are done according to the way they're supposed to be done. And they're going to work closely with the auditors between now and June 30th to make sure that there's nothing else and there's nothing going on that's going to pop up and go, you know, you shouldn't have done it that way. You should have done it this way instead. Okay. So we're establishing that those relationships with Mark Harville and Kinsley, the auditors that are assigned to Murray County Public Schools, to make sure we're doing things as close to the way that they expect them to be done.
Yeah. All right, the implementation of Skyward, I'm confused. We have one department head saying that she wants to do it budget year from July through June.
Yeah.
And we have another department head, she wants to implement it in December. Which are we going to do? I mean.
So Skyward as a whole is implemented July 1 through June 30th. That's all of your financials. That's all of your accounts receivable. That's all your payables. That's payroll. That's liabilities. That's all of those things. When we start talking about, and it's, gosh, remind me, we're talking about the personnel. When we start talking about salary negotiations, basically what happens is all that information from Skyward is imported into salary negotiations to get you ready for budget preparation, which will happen July 1st of the following year. That's the idea.
But actually, the budget preparation will start like we're doing it now.
Yeah.
So that's why, that's why the staffing part needs to be done in December or February, whichever works in your schedule, so that we have those numbers now to.
Well, I'm talking about the accuracy of the accounting reports that are sick leave and are unused leave days and all of that. I mean, what time frame are we going to use all that?
I would recommend that to start with a new fiscal year, because then you'll be loading in the numbers as people start the fiscal year, And then going forward, it'll always be updated. Once you start the new one, then you'll have your carryover, or however your board policy supports what they can
Amanda,
carry
I thought
over.
you were saying that you wanted to wait till December to.
Salary negotiations was December for training, but as far as time off, that's fine to start July 1st. That's when we need to start it.
Okay.
Anything further on that particular finding? Finding 2017-008. Anything on those? I guess there was one statement that Mr. White made, that transactions can basically disappear, and that's what happened in this particular instance. And I know it was obviously before your time, Ms. Gagliano, but we have a fiduciary duty as board members to make sure that we're making decisions on behalf of the school system and upholding that fiduciary duty. What reassurance do I have that transactions aren't disappearing at this time? Can you answer that, Dr. Marzak?
Was that noted in one of his
It was
A through G?
It was D, but that's something that he actually said, and I took notes on it.
I must have missed him saying that. I didn't hear him say that. Sorry.
You want to go back and watch the video and then report back to me on it?
Probably gonna have to.
Thank you.
You said it's D.
All right, we'll move on to the next one. Finding 2017-009.
Madam Chair, may I speak to that?
Sure.
Oh, yeah, sure.
I am not an accountant or an attorney, and so I certainly accept what the auditor said. However, I don't think they told you all the story, and so I feel like it's important that we make sure that that's clear. First of all, they questioned and found problems with our piggybacking process. However, TCA 12-3-1203, Part B2 says any LEA may purchase directly from a vendor the same equipment at the same price and under the same terms as provided in a contract for such equipment to be entered into by another LEA. So that's what we were trying to follow. We requested documentation. What we were given was the contract between Lincoln County Schools and Lenovo. So that's what we used as the basis for our piggybacking. Now, they said that our mistake was we didn't have the actual bid documents, which were used to secure that contract. We since have got those. They also noted that we didn't buy the same device. However, in the what was in the referenced bid from Lincoln County was for an 11E Yoga 3rd generation. What we ordered was the 11E Yoga 4th generation because the 11E Yoga 3rd generation had been discontinued. And in the contract it said if a particular model is discontinued, the district may negotiate a replacement equivalent model if necessary. It said also in that agreement, other school districts may use this proposal to purchase leased laptops at the vendor's discretion as per TCA 12-3-1203. So we were trying the best we knew how to follow the rules. We maybe made a mistake in that we did not secure the actual bid documents, but that was not reported in the audit. They just said we didn't do it right. And so I want to make sure that we kind of threw out there, we were making every attempt to do it right, and we were following those things the best that we knew how and working within the documentation that we thought was provided.
So Stan, if you guys did it right, I mean, in your estimation, you guys were following the process, following the law, following the direction that you got from the attorney, then is there a need for you to get an additional staff member for purchasing?
Obviously, the laws are pretty complicated for purchasing, and we didn't do it right even though we thought we were. And as the district grows, especially as we're handling more and more capital projects that require bid documents like this, We feel like we need a dedicated person who can spend their time researching that, because this particular one, I gave the contract to a member of my staff and asked them to review it, and they obviously missed it. When I was shortly after I was hired, Patty Vargo brought over to me one day the purchasing stuff and laid on my desk and said, "You're now over purchasing," and Eddie Hickman agreed with her that I would be. I had a secretary to work with me and a construction manager, nobody else, and they didn't give me anybody else to do that. So my administrative assistant, I shouldn't call her secretary, and I took on the purchasing. Now, since that time, the district policy's been changed to say that all purchasing must flow through either of the assistant superintendent's offices, and that's what it does. So all of it is supposed to flow through our offices for that process. But I feel like as the district grows and because the complicated nature of the procurement laws in Tennessee, we would be better served if we had somebody to devote full-time to their attention, because there's a lot of training that you can go to. We are members of I can't remember what the acronym or acrostic, whatever it is, acronym is for that, but the Organization of Purchasing Agents in Tennessee, it's a very active group. I just, with all the other things I'm doing, don't have time to attend their meetings and keep up with all the purchasing laws. So I think we'd be well served to do that.
So do we have a training issue right now, though, with your current staff?
I don't know that we have a training issue. I think we have a workload issue when we get into complicated issues like this that need a lot of research.
Okay. Any other questions? I did notice in that particular response, you did mention Patty, you did mention Mr. Hickman. I know at our last board meeting, there was a discussion of Walter Bobo. I was just wondering if anybody can explain what the connection there is between all these people that haven't been here for like almost 3 years.
My explanation was just to say that's how we ended up with purchasing, because prior to that, it was in the finance department.
Okay. And what about Walter Bobo? I mean, Mr. Pennings isn't here, but I remember him saying that the other night, and I know.
Walter Bobo was the finance director before Patty Vargo.
Right.
And
I think it's been explained to me by someone that all of our problems from this audit came about because of things that Walter Bobo did or Patty Vargo did. And I go back and I look at our audit findings from those, and we didn't have 11 audit findings. So I'm a little confused how they figured into us getting 11 audit findings.
And I can't answer that question.
Okay. Does anybody else know? That's not anything that anybody has said to anybody to try to excuse their own.
So what's been explained to me is the way it used to run is that Mr. Hickman ran the top floor and then Mr. Bobo ran the bottom floor. And so Mr. Bobo was kind of like the go-to person with regards to everything downstairs. And so he would take financial pieces, HR pieces, purchasing pieces and stuff like that, and he would do that work himself. And what I've been told is that when he left, he took all of that institutional knowledge with him, and then people didn't know who was doing the work or what was happening in other departments, and everybody else thought that everybody else was doing it, because when he left, oh, I guess Walter may have told him to do it, or Mr. Bobo may have told them to do it. And so what we're starting to find out is that nobody knew who was doing that, and that all that stuff kind of steamrolled into the kind of the position where we are now. That's what's been told to me. I've never met Mr. Bobo. I'm not sure who he is. I wouldn't even know if I saw him on the street. But what I understand is now what we have to do is we have to replace all of that institutional knowledge. We've got to retrain people. People I know have to understand the individual responsibilities that they have. We have to cross-train people, as Ms. Gagliano says. Other people need to know what other people are doing, so in case one person steps out, then the other person has the ability to step up and do it. So what's been explained to me is that's the way it used to run. And so what happened is it was just kind of just like a ticking time bomb. And when the budget was built wrong in the 2016 year, and there was nowhere to fix it, and nobody knew how to fix it, and monies were not being sent, and things were not being ordered, and it all kind of imploded, that had started years past and kind of built up to that point. That was also the assessment of some of the personnel in VACO when they first arrived is that some of the people in the finance department didn't really know how to do the jobs that they were tasked with doing. And that's because that they had had their institutional knowledge taken away from them, and they'd never been trained on what they needed to actually and accurately do in order to get their jobs done effectively. And it all kind of imploded from there. That's what's been explained to me.
So it's taken you 3 years to get an explanation that it was somebody's fault from how many budget directors ago? Is that where we are as a system?
I wouldn't point to any one person saying it was any one person's fault, because throughout the course of that time, it should have been known that certain people didn't have certain trainings to do certain things. It should have been known, and it took us to get to.
Did you inquire about those?
We didn't really have major audit findings before then. You wouldn't assume that there were any major problems that were happening. But then again, we were also using a finance system that wasn't as transparent and didn't also track keystrokes as what Skyward does. With Skyward, it's very transparent. With other finance systems that we had with local government, it wasn't as transparent. And so that kind of started the process of the downward spiral, and kind of led us to the position where we are now with an end of 16-17 audit, where we kind of know the things that need to be handled, the things that need to be taken place, and the things that need to be done from moving from here on out forward.
Any other questions? Finding 2017-10, that was the CDL. Do we not have receipt books at like all of our schools if somebody takes in any cash or anything like that? Okay.
I think in this specific one, it was just a misunderstanding that came from, and according to the staff, and we have not been able to get a copy of it, but actually what happened was there was a change in the wording of the law in 2012 for third-party policy and procedures that we get from the State Department of Safety and Homeland Security, as Dr. Marzak mentioned. And the wording changed to from being said prior to that payments, it said prior to that the checks must be made out to the third-party examiner's company or school system only. The wording was changed to say payments can be made by cash check, credit card, or money order. And according to what the two examiners who have worked for us said is, we asked the State Department of Safety, does that mean they can just pay us directly? And they said yes. And so they started doing that. And we were not party to that whatsoever. It was directly a transaction between the two of them. In normal circumstances, if we are taking cash that go into our books, we always receive that. But because of that, they made that determination they could just take the money directly. And obviously the auditors this year, and I think as they said, they've started checking with several school districts and found this was the case.
Right.
But I think everywhere else, I know everything I've seen, there are receipt books in schools.
Okay.
And I know there's one in our office. I know Karen might can speak to that, or Elaine can probably.
I can say that we are receipting them in. It goes through the receptionist who does all the receipting, and then we deposit the funds at that point in time. I had not seen them prior for the CDL. Now I've been seeing lots of it, and I didn't understand why, but when I started asking questions, why all of a sudden are we getting these things, and they were explaining it to me. So we are receiving them in, yes, ma'am.
All right. Finding 2017, 2011. Any questions on that one?
That one
Sure.
just briefly, just to say that, again, I'm not questioning the auditors, but it's kind of like they dinged us for the same sin twice, because we didn't call the computers a capital lease, so that's why we didn't capitalize it. So that's why, I mean, if we would have called it a capital lease, we would have capitalized them, but we don't capitalize things that are operating lease. We do have operating leases on copy. We don't capitalize those because they're not our property. So It's kind of like we got dinged twice for the same thing.
Well, you had something else on there too.
I know. Well, the other thing, and let me tell you about, and I'll be glad to speak to that as well, because, and I want to look at this just so I'll tell you the exact number. The other thing they didn't tell you is that we had 69 capital projects that we tracked during
saw that
the
in here.
16-17 fiscal year, and 50 were capitalized, and we messed up 2. So we got 48 right. Nobody said, hey, they got 48 right. They just wanted to talk about the 2 that we missed.
Right.
And what happened was there's a handoff between Jerry, who keeps the records while they're in process, to when they're finished, to Mona, and these 2, for whatever reason, it appears that Jerry gave one of them and Mona missed it, and Jerry forgot to give one of them to Mona. So it's like they both made a mistake. But I'd like to at least somebody say, hey, they got 48 right. Because the other thing I want to say is that is compared, because of we've been getting a lot of money to fix things at schools. In 14-15, there was only 28 projects. In 15-16, there were 49, and this last year there's 69. So they've grown pretty dramatically too. So the workload and what we're keeping, but we're trying, Karen and I are working to double check this to make sure it gets handed off correctly.
Good deal. Well, you want us to keep getting money, right?
Yeah, we do. We'll
You
keep
want it
doing
to
it.
keep
We'll keep
going
doing
up,
it. That's
so-
why we're going to put procedures in place.
Good deal. On there, it did say it's attributed to ineffective management oversight, a lack of technical skills. Do you feel like the technical skills, do we need more training? Is there anything we need to do to address that, or it was just a mistake?
As far as the handoff, I think that was just a mistake. Now, as far as recording the capital assets once it's handed off, I can't speak to that. That would be more Karen.
And I'm working on that already. I've met with the person that it's supposed to be assigned to, and she told me that she did not have the training and did not understand what to do. So I'm going forward, and I'm getting her the training, and she is going to work with Stan's individual. They're going to actually divide it up so that it's not all on one person, so they both know how to do it. And Jerry will handle her projects that she's closest to, and then Mona will handle everything else. So they're going to have the training. They're going to have, individual, not Stan's person, but the individual in the finance office will have a chance to do it right, and we're going to go forward from there. So that's in the process now.
Yeah. Anything further on that particular finding? The last one was finding 2017-2012 or 2017-12 accrued leave records. Any questions? We may have beaten that dead horse. Any comments from anybody generally about the audit that they haven't said?
I just wanted to say one of those, it seemed like, for one thing, I know fixed assets are important, but typically, in my experience with auditors, there wasn't the amount of focus that was put on this. So I find that interesting. Secondly, there was an audit finding that said there were an excessive number of entries. Keep in mind that a lot of entries were done to try to fix things. So I did question the auditors and say, okay, so if we don't fix the problem, it'll be an audit finding, but if we do fix it, then we're going to get cited for too many entries. So what's the magic number? And they were just like, well, if you fix them before the end of the year, then it'll be okay. So, but that was interesting too, because kind of a catch-22. So.
Well, I think too, they had some issues with the fact that there were budget amendments that were done that then had to be corrected in a different way. And I think you've worked through that process with them as far as rescinding budget amendments and
Yes.
things like that were done incorrectly in the past. But I think for the 2016-2017 year, I just think that there were just a bunch of them, and they didn't really necessarily know if they were correct.
And we still are having some rescinding budget amendments that you're going to see. And a lot of times it's because the individuals that generate them may have miscoded or something, and we're relying on them to know their codes, like if it's federal or whatever. And so then they realize it later after it's gone through the process. So then our only alternative is to rescind and do it again. So it's, you know, not desirable by anyone, but it's something we have to do to correct it.
Mr. Dudley, did you have one?
Who is taking that process and trying to determine if we can receive reimbursement for the overpayments and the legality of all that?
That's kind of been turned over to my department, and not just with the audit, but anytime if there's an overpayment in payroll and we find that out, we're sending letters, we're calling the employees, we're trying to work with them on some kind of payment plan. So that's kind of something that they've tasked my office with.
Okay, so have the letters already been sent, or?
We are going to send the letters. I want to break it down to exactly what is owed. They were supposed to get paid for 60 days. And then those overpayments of exactly how much they did get overpaid, I want to break that down so I have specific information to give to those retirees.
Okay. Well, I mean, I feel like the sooner we start the process, the more likely we are to be able to.
Yeah, my goal is to get those out by the end of this week. We just wanted to kind of go through this process, and then I've got to break down because they were supposed to be paid for up to 60 days. So I've got to find out the difference and break those numbers down.
Else?
Dr. Marzak, in summary, I think this speaks to poor management. Like, at any point in the last year, did you ever think, like, we're spending an awful lot of money with VACO, we're still having auto problems? I'd like to know, do you have anything to speak to that this is bad management?
So, much like many of you guys, I'm not happy with 11 audit findings. I don't think any superintendent would be happy. I don't think any board would be happy with it. We did have a lot of problems that presented themselves in the 16-17 year. That's one of the reasons why Mr. Parliament in October said, you know, we're going to have some audit findings. There are going to be some things that are going to pop up. Was it to this level? I don't think we thought at that time that there'd be 11 audit findings. We thought maybe there'd be sub-10 audit findings. I think what VACO came in and what they did is what we needed them to do. They came in, they fixed payroll, they fixed insurance benefits.
Hold on. You think they fixed payroll?
To the best of their ability, they did. Yeah, during the 16-17 year, I believe they did. Yeah. They got fines waived, they got fees waived. Going back over that 5-page report, there were a lot of things that they did in a short amount of time that I think was really beneficial to the district. They did a lot that was beneficial. Could they have done more if we'd had more time? I'm sure they could have. Or if more people had been in, then yeah, I'm sure they could have. But they did the best they could with what they had, with the resources they had, with the information they had, and with the time they had. I thought that they did the best job that they possibly could do. So moving forward, we're going to take this information. We now have a CFO with school-based experience that can carry this information forward and make sure that these things are taking place. We know the information that has to be addressed. We know the work that has to be done. Now it's incumbent upon us to do it. So I feel comfortable with where we are here moving forward. And much like you guys, I'm not happy about the audit either. But it is what it is, and we're going to fix it from here moving forward.
Hey, I don't feel like you answered my question, but okay.
I do want to say thank you to the staff for the time that y'all did put in to the recommendations, to the responses and whatnot. I know that to go through and answer this and then also to sit through this tonight was probably slightly painful for everyone. But I think it's something that we needed to do. We needed to rip this Band-Aid off, and we need to try to heal this wound. I do want to say I took some notes tonight when people said that they accepted responsibility. I appreciate, Elaine, you said that tonight, that you should have taken some things on while you were working with VACO, and I appreciate you saying that. Mr. Williver totally took responsibility for his stand, even though you disagreed. You said, I take responsibility. And those are powerful words to me. So I really appreciate you guys stepping up, and I'm encouraged with the direction that we're going because y'all are willing to do that and the work that y'all put in on this process. Anything else? Thank you.